क्या अपडेट झाले
वो पता नहीं करता नहीं करते देखिए
आदेश मध्ये एक नाम की स्कीम
ऊपर क्या किया है?
रजिस्टर से ऊपर ही
क्या ऊपर मतलब बड़ा है ऐसा?
मध्ये एका दिवसात
दो बार पड़ा है
साउथ इंडियन
क्यों घुमाता है ना
तो इधर
मैंने प्रदीप आया तो उसको उसमें प्रदीप और ये बात हो गया
कहाँ चलो पैसा चाहिए
थोड़ी वालों ने बोला कौन
उधर जाओ उधर छक्के उधर लेके जा रहे पैसा खत्म हो रहा है तो प्रवीण सर के तो बिल्कुल आ रहे हैं अरे तर सर विचारते एवढे पैसे जातो पुढे चलो आता काय चालू हाँ,
सब नीचे मिल रहा है
हाँ, बड़ा भी जा रहे पैसा
सब लोग देता है
सब लोग हाँ सब लोग
सब
जरूर
लोग देता है
तो बहुत
क्या वो 2% से पैसे घुमाते हैं वो लोग और बहुत बड़ा बिजनेस अपना बैनर लगता रहेगा ना उधर हाँ
नहीं लगा
लगता है ना आने वाले का बैनर।
उनके मठ के बाहर लगता है हम लोग लगा रहता है हम लोग लेता था ना कंपनी से भी तो वो कंपनी का बैनर अलग क्या ये कौन सा सार्वजनिक गणेश ठक्का गणपती ठक्का लोक का नाही उसकी बात करायला तो सार्वजनिक गणेशोत्सवाला बोर्ड लावतोच सुद्धा याचे 5,000 येतील ना
ते अजून जाते जास्त
50,000
होते ना
सगळ्या मॅचला बोर्ड असतात तुमचे आमचे जे असतात जो फाइनेंस करेगा उसका बोर्ड हाँ 5,000 को बोर्ड नहीं टूर्नामेंट में रहेगा तो उसका भी बोर्ड लो
अरे अच्छा टूर्नामेंट में ये भाई तू टिकट दिया था सबको 20-20 रुपए का, उसका क्या हुआ?
आपको पता है ना
क्या हुआ?
नहीं आया हो गया सब
नंबर नहीं लगा तुम्हारा?
एक रुपया नहीं
एक को लगा था
5 टिकट को दिया मेरे को, बोला श्योर लगेगा, उसमें लिखा हुआ है श्योर लगेगा करके।
ऐसा थोड़ी बोलो
बॉटल लगा तेरे को अच्छे है पॉलिसी नंबर रिक्वेस्ट दिया है क्या बोले
কালগোটা ছাড়া কালগোটা কত টাইম করে দাও তারপরে ঠিক আছে আমি একটা मीटिंग अटेंड করব हम इसी से कर लेंगे उसमें बहुत ड्रामा होता है क्या फोन से करो ना तो क्या इशू है उसमें उसमें सही से कनेक्ट नहीं होता है
हेलो गुड आफ्टरनून मैम मेरी आवाज आ रही है मैम आपके पास हेलो
होगा कि
देखो देखो पहले चेक करो ओपन करो
हेलो
ओपन करो जल्दी से
এখানে আছেন
अरे हेलो
गुड आफ्टरनून मैम मेरी आवाज आ रही है मैम आपके पास
Hello. Good afternoon, Ishan.
गुड आफ्टरनून मैम हाउ आर यू मैम
I'm fine, thank you. I
नोटिफिकेशन गया
can hear
नहीं है
you.
क्या अभी तक
यस मैम ट्रिप कैसा था आपका आई होप एवरीथिंग वेंट वेल
कोई आसिफ
All
नेक्स्ट जो
well, all
पेमेंट
well.
आएगा सर बोले उसमें ऐड कर
ये
लेने के
म्यूट
लिए
कर दीजिए आप लोग आपस में
ठीक है
प्लीज. I request all of you to mute yourselves. তুমি করে দেবে তো.
ओए, क्या हुआ हाँ कर ले भाई
मैम मेरी स्क्रीन दिख रही है क्या
Oh yes, we can.
श्योर
I'm waiting for Mr. Sehgal to join.
श्योर मैम
Good afternoon, sir.
Yeah, good afternoon.
So I think we can start the meeting because all have joined. We have around
Okay.
23 participants.
All
So
right.
Mr. Ishan Tulsian is also here. So I
Yes,
request.
Mr.
Hello,
Ishan.
sir. Good afternoon, sir.
afternoon. Yeah.
Nice to connect with you, sir.
Thank you. Welcome.
Good afternoon, friends.
Thanks.
We will now start the today's training program. I request Mr. Ravi Sehgal, Chairman of the National Center for Export Promotion, to give the welcome address.
Thank you, Animaji. Good afternoon, ladies and gentlemen. On behalf of the Institute of Indian Foundrymen and our National Center for Export Promotion, it gives me great pleasure to welcome all of you to today's training program, Burning GST Issues and Legal Safeguards for Foundry Industries and Exporters. I think we all have been quite familiarized with the GST since 2017, but there have been changes which have come in between, and I'm sure there are going to be further changes, which the government is going to be announcing, as has been informed in the press. And the foundry sector in India has always been a vital pillar for our industrial growth. And with the globalization and increasing cross-border trade, exporters face evolving challenges, especially in the domain of taxation and compliance. GST has brought significant reforms, but it has also introduced complexities, particularly for those engaged in export-import transactions. It is therefore crucial that we as industry stay informed, prepared, and compliant. Today's session has been specially designed to address these pressing concerns, and I'm very thankful to CA Ishan Tulsian, for being with us. He's an eminent tax professional, an expert facilitator, and I'm sure he'll guide us through the critical topics such as decoding of GST audit and scrutiny issues for exporters, understanding the legal safeguards and documentation protocols, sharing practical strategies so that we prevent disputes, and aligning our systems for enhanced GST compliance in the fiscal year 25-26. I'm sure this is not just a one-way traffic. It's not just going to be him speaking. He will, of course, give the highlights and his views. And I'm sure there are going to be questions and there are going to be queries from the members. So I'd request everyone to make it an interactive sessions. Put your questions in the chat box as and when you think whatever he's saying you need to understand a little more. And Mrs. Anima Pandey will be following that chat box and will be in touch so that your queries can be responded to immediately. So once again, thank you, CA Ishan Tulsian ji. Thank you for being with us and enlightening us. And I request all the members to take full advantage of his presence amongst us. Thank you.
Thank you so much, sir.
I'll
Shubha,
request
can you mute?
everyone to be muted, so if the admin can continue monitoring so that there's no disturbance.
Yes, sir. So now I would like to hand over to the program to Mr. Ishan Tulsian. Please, you may start the program.
Thank you. Thank you, Ravi Sehgal, sir, the chairman at NCEP, National Center for Export Promotion, Indian Institute of Foundrymen. Thank you to the director, Ms. Anima Pandey ji, for having invited me over here to conduct this session. Let me share the presentation with you first. Just kindly confirm whether everyone can see the presentation.
Yeah,
Yes, we can see.
Okay, so I'll make this full screen. Yes. Is the presentation is everyone able to see the presentation? Can you please confirm?
Yes, we can see.
Okay, thank you. So thank you for such a wonderful and generous introduction of mine to the chairman, sir, and to Ms. Anima Pandey ji. Let us go ahead today to discuss the burning GST issues and legal safeguards for foundry industries and exporters. So what I have tried to do is that I have tried to bring in foundry specific industry issues from the point of is everyone muted? Please feel free to unmute yourself whenever if you want to ask any question, or you may post the question in the chat box and ma'am can take it up and further I can answer the particular question. Or you feel free to unmute yourself also. You can ask me any question at any point in time. That's not an issue. As Ravi Sehgal sir said, let us make the most out of this particular occasion. We have all assembled here for you. So please feel free to ask any questions regarding the topic, and I'll be glad to take it up. Thank you. So what I have tried to do is that in the presentation, I have tried to put in all the burning issues in the sense from the GST departmental audit, as well as GST litigation, GST adjudication means when show cause notice is issued and then when your case is adjudicated or at appeals also. Whatever burning issues are there currently, which we come across, especially in the foundry industry, we have tried to explain that. We've tried to put in real life notices and we've tried to put in real life replies, which we have done for our foundry clients, as well as what are the best legal safeguards, how to tackle these kind of issues. So let us go ahead and see the first matter. So let us, before we dive into the matter, let us understand where we stand currently in terms of GST litigation. GST litigation मतलब क्या हुआ कि अपने अपने कौन से साल के शो कॉज नोटिस अभी भी आ सकते हैं. देखिए, बिफोर वी प्रोसीड वी नीड टू अंडरस्टैंड शो कॉज नोटिस दो सेक्शन के अंदर होते हैं जीएसटी में. एक सेक्शन 73, एक सेक्शन 74. 73 मतलब कि कोई भी नॉन फ्रॉड की आपका नॉन विलफुल मिसस्टेटमेंट जो कोई विदाउट फ्रॉड केस के लिए होता है, जिसमें पेनल्टी आपका एक लिमिटेड अमाउंट रहता है 10% ऑफ टैक्स और 10,000 विच एवर इज हाई. और सेक्शन 74 आपका होता है कि कोई भी पर्टिकुलर शो कॉज नोटिस जिसके अगेंस्ट आपका कोई भी वो बोलते हैं कि फ्रॉड की आपका विलफुल मिसस्टेटमेंट कि आपके कोई विलफुल सप्रेशन आपका ऐसा करके हुआ तो उसमें आपका पेनल्टी 100%. तो ये दो अलग अलग सेक्शन है. इसके आपके जो टाइम लिमिट्स है वो भी डिफरेंट है. एक है आपके 3 इयर्स और एक है 5 इयर्स. 3 इयर्स ऑर्डर इशू हो सकते हैं 3 इयर्स फ्रॉम द ड्यू डेट ऑफ द एनुअल रिटर्न. तो अपने देखते हैं अपने करेंटली किधर है. देखिए 2019-20 जो मैं स्क्रीन में अपने देख रहे हैं फॉर द फाइनेंशियल ईयर 2019-20 if we come under this column which is show cause notice under section 74 means show cause notice fraud के अंतर्गत, fraud की willful suppression willful misstatement के अंतर्गत मतलब कि 74 के अंदर में अभी 2019-20 का जो लास्ट डेट है शोकॉज नोटिस इशू करने का फॉर द फाइनेंशियल ईयर 2019-20 वो है 30 सितंबर 2025। मतलब कि अगले महीने एंड तक हमारे पास में अगर कोई भी नोटिस आए फॉर 2019-20 वो आ सकता है इन रिस्पेक्ट ऑफ कोई भी अगर मानी डिपार्टमेंटल ऑडिट कंडक्ट हो रहा है अभी उसके बाद में
Ishan,
यूजुअली 99।
Ishan ji,
यस मैम।
please try to deliberate in English because we have number of participants from
नो
South India
प्रॉब्लम,
also.
नो प्रॉब्लम,
Okay.
नो प्रॉब्लम, एब्सोल्युटली, एब्सोल्युटली, श्योर। Okay, so what I was trying to say is that see in financial year 2019-20, the last date for the issue of show cause notice under section 74, which is the section related to fraud, that is 30th of September 2025. What does that mean? That means that for the financial year 2017-18 and 18-19, the last date to issue a show cause notice or open your case under fraud has elapsed. That was the last day was 30th of June 2025 for financial year 18-19. So we can be assured that for these two previous years, these two financial years, we shall not receive any show cause notice. Now for 2019-20, the last date of the next month, that is the last date for a show cause notice to be issued under for in respect of financial year 19-20. What does this mean? This means that if any departmental audit is being conducted right now under section 65, so they will first conduct the audit. They are going to come out with discrepancy sheet, and then they may proceed with issuance of show cause notice if you don't make any the entire voluntary payment. So they can do so only up to 30th of September 2025. This is very crucial for us to understand. Similarly, for 2021-22, if you were to see in point number 5, the last date to issue show cause notice under section 73, which is the non-fraud cases, that is 30th of September 2025. What does this mean? This means that the department cannot invoke section 73 show cause notices in non-fraud cases for any financial year before 2021-22. So for 2020-21, your file is closed in respect of the show cause notice opening under non-fraud cases, which was the last date was 27th of November 2020. So we need to be very alert regarding these two dates primarily, right? I have made this particular chart for you. This is a very crucial chart wherein I have also proceeded to give in these specific dates. The last date for issue of show cause notice under non-fraud 73, then fraud 74, orders also under 73 and 74. There is a section 74A. I believe you may be aware of this. What is section 74A? 74A has combined this section 73 and section 74 into a new section 74A, wherein there won't be two separate sections for your issuance of show cause notice under fraud or non-fraud. So there will be a combined section 74A, but this will be applicable only from 2024-25 financial year. So this is a little later because currently we are experiencing receiving show cause notices in respect of 21-22 for non-fraud cases and 19-20 for fraud cases, right? Okay. Now let us come to few burning issues which we come across during departmental audit. Now, what is departmental audit? Departmental audit means that the department can issue a particular notice under section 65 to you and be like, sir, kindly ready your books of accounts, kindly ready your tax audit report, kindly ready your vouchers, your accounting software. We want to come visit your office for a week, or we may come visit for a day and we will commence our audit and we will conduct a desk audit, right? Either a client's premises audit or a desk audit. We are going to scrutinize all your books of accounts and data which is available with us, and we shall come across the points of discrepancies and violations. So let us see, there are certain, I have given these real life notices which our clients have received. So these real life audit observation sheets are there. So once an audit is being conducted, so the observations during the departmental audit, they are communicated in a discrepancy sheet under Rule 101, Sub-Rule 4. So this is one of them. Now let us see. Now we may be aware that we need to pay reverse tax under reverse charge mechanism in respect of services supplied by security agency. What does this mean? Let us see the law first. Now, for example, if your company is availing any security guard services, see, security services can pertain to CCTV cameras also, can pertain to other types of services. No. But for this particular provision for RCM, your security services should entail only the supply of security guards, right? So if your company, which is a which is a registered person, that is availing security guard services from a non-company, means a non-corporate. So the security guard agency should be a non-corporate. It should not be a company, neither should it be an LLP. So if it is any person other than a company or an LLP, and if they provide the company, your company who's registered under GST, security guard services. So the company, you're the recipient, you are supposed to pay RCM of 18%, right? Now, what happens is, see, let us see this particular notice, Bullet Security Services, right? They have given a supply of services of taxable value, say 12,96,617. Now, see, what we understand, seeing Bullet Security Services, does it have a suffix of private limited? No. Does it have a suffix of LLP? No. So it's not a body corporate. Let us assume it's not a body. Now, since it is not a body corporate, it is a person other than a body corporate. So your RCM would be applicable because the recipient, which is your company, that is registered under GST. The recipient is registered under GST. So you are supposed to pay 18% GST under RCM on 12,96,617. This tantamounts to 1,16,695 each under CGST and SGST. Now, what has happened is why this notice has come up. See, this particular Bullet Security Services, as in many hundreds of cases which I've seen personally, even though it requires to issue an RCM invoice to its client, means, for example, your company, but it may not be aware. It may issue an invoice under forward charge mechanism, whereby charging 18% GST. And you may not be aware of this particular provision, and you may pay 9% CGST, 9% SGST, and pay this 1,16,665 already. You may have already paid it. Now, what happens is 2-3 years later, now the GST departmental audit happens, and at that point in time, this particular observation it comes out that this particular agency is not a corporate, and you are a registered person, so you are supposed to pay RCM along with applicable interest and penalty 2-3 years later. Now, you may argue that, sir, I've already made the payment of CGST and SGST under forward charge mechanism 2-3 years earlier. Now, the department would be like, no, sir, if you've already paid, kindly go for refund, or you ask your supplier to return back that money. We want you to pay the RCM amount today, along with applicable interest and penalty. Now, what is the pain point here, and what should we understand from this notice is that whenever a security guard service invoice, tax invoice comes to us, we need to first evaluate whether the security guard agency is a corporate or an LLP. If it is not, even if it charges mistakenly, if it charges forward GST under forward charge mechanism, 9% each, we are still supposed to pay RCM out of our pocket and claim input tax credit. In that particular case, we shall request our security guard agency, Bullet Services, that kindly please amend your invoice and kindly please report it in the correct column, table 4B of GSTR1 rather than table 4. So once it is amended, it comes in your GSTR2B as input tax credit applicable where RCM is applicable, and you pay your RCM and you claim your input. So this is one burning issue which I have experienced. See, otherwise what happens is you've already paid 1,16,000 each 2-3 years ago under forward charge. Now 2-3 years later during audit, you shall pay again under RCM, and you may not be able to even claim input tax credit because the time would have elapsed to claim input tax credit. The time to claim input tax credit is the next year's 30th of November. So if this particular notice pertains to financial year 22-23, the last date to claim input tax credit, pay under RCM and claim is 30th of November 2023. But since audit is happening in 2025, so this time has elapsed. So this tax is already paid under forward charge mechanism. We shall pay again under reverse charge, and we will not be able to even claim input tax credit of that. So it's a triple whammy for us. Now, if we were to see, I made a particular flow chart here also. As you can see that for security guard services, the security guard supplier, he may be registered, he may be unregistered. Does not matter. It does not matter. But the person, the company recipient, that person needs to be registered. Means your company needs to be registered. And then you shall have reverse charge RCM applicable. But for body corporate, if the supplier, the security guard agency is a body corporate, then if he's registered, he shall charge GST and a forward charge. Otherwise, if he's unregistered, he shall not charge GST. Now, let us come to the second burning point, which I observe. See, this is again a discrepancy notice from a GST audit of a client. Now, here you see there are legal services supplied by advocates, right? We may be aware that there is RCM, reverse charge mechanism, applicable, tax under reverse charge mechanism applicable on such services received from advocate by a registered company. Let us see the law here. So, if any advocate or senior advocate or firm of advocates, they are giving a particular service which is legal service. See, the legal service here. Now, what does legal service mean? Legal service means that there needs to be any advice, consultancy, or assistance in any branch of law. And it includes representational services, means it is not only limited to me going for a personal hearing before the tribunal or before the income tax authority. No, it's a part of it. So if I am a lawyer and if I give you any advice under criminal law or income tax law, and if I am a lawyer and if you are registered under GST, you are supposed to pay a tax under RCM. Now you may argue that, sir, see, you are a lawyer, but you even provide services which are accounting services, which may be ITR filing services, income tax return filing services. But would they classify as legal services? Or they may be classified as non-legal services. Now, we have a contention that filing ITRs or doing accounts, if I'm a lawyer and if I issue you an invoice, and if I don't mention legal services or anything like that, and if I just mention ITR, there may be a scope that I may dispute with the department and say that, sir, RCM is not applicable on the same because it's not a legal service. But we still advise that if you are receiving any type of service from an advocate who's practicing as a lawyer advocate, kindly please pay RCM and claim input tax credit, right? Now, as you can see here, Sukumar Das, S. Jalan and Company, M.K. Tiwari. Now, these people, M.K. Tiwari, HUF, now this person may not be a lawyer, may not be a practicing advocate, but what happens is during GST departmental audit, the departmental team, audit team, shall go to the debit side of your profit and loss account and shall see the expenses and the nature of expenses. Now, whenever they will see a legal services or services from lawyer or from chartered accountant or any sort of legal services, the heading, they are going to drill deeper in that. And they are going to take the entire ledger, and they may not even inquire whether these persons are actually practicing advocates or lawyers. They may be even chartered accountants, cost management surveyors. So you can again contest and say that, sir, these particular services which I've received from my CA audit services, they have been mentioned under the legal services tab of the debit side of the profit and loss account. But these are not lawyers, so RCM is not applicable. So you can again contest, right? Now, director sitting fees. Sir, are we aware that directors, if a company such as yourself, if the company receives any sort of service from a director, so RCM is applicable on the company. Are we aware of that? Now, what kind of services can a director give to a company? For example, see, when we talk about a director, managing director, whole-time director, operational director, these directors are whole-time employees, most of them. Now, if they're whole-time employees of the company, so they are naturally receiving some sort of a remuneration or a salary. Now, in case if they receive a salary from the company, they are paid employees of the company. And if they are the paid employees of the company, if they receive salary of more than 12 lakh rupees in your income tax slab for your financial year 2025-26, there may be no TDS element that the company deducts. But if it is more than 12,75,000, the company may deduct TDS. Right? Once the company deducts TDS from the salary, the company will issue a Form 16, right, in Income Tax Act. Now, during departmental audit, all these documents are asked by the departmental officers. So once they see a Form 16, they'll be like, okay, sir, this is a salary, TDS is deducted. So as we are aware that employee-employee relation and salary movement between employer and employee, is GST applicable on that, yes or no? It is not applicable because it is covered under Schedule 3, right? Schedule 3 means any supply of services or any supply which is not categorized either as a supply of service or supply of goods, right? But in case if the director is a CA, is a CS or a CMA, MBA, finance manager, and he offers specialized financial services, for instance, or management services, and he charges 50,000, 60,000 rupees as professional for against his professional services. In that particular case, it shall not be considered to be an employee-employee relationship. And at that point in time, your TDS may be deducted under section 194J in Income Tax Act. So there, what will happen is, there we will see that, let us see this under section 194J. So here, for professional services, the TDS is being deducted by the company, right? Now, when the departmental officers will get hold of section, this form 16A, which is your TDS deducted against your professional services, professional charges. So at that point in time, they will be like, sir, the company is availing services from a director, right? And here RCM is applicable. So the company is supposed to pay RCM on 50,000 rupees per month paid to the director who is a CS, right? And 18% RCM the company needs to pay and can claim input, right? Is this particular point clear? Can I have some sort of a response, please, from the audience? Is this particular point clear, that in case of receipt of salary by the director, we shall not have any GST application, but in case of the receipt of any professional charges in any other capacity, as I said, right, at that point in time, RCM shall be applicable. Yeah, it is clear. Thank you. Someone has responded. This particular point is clear. Okay. So now let us see, just a moment, please. Yeah. So see, now in case if the director is providing, let us see this example. In case if the director is, in case if the director is just, yeah. In case if the director is providing an immovable property, for example, he has a commercial property or a warehouse. Now, if he's providing a warehouse to the company, you're like, okay, you store your grains and your warehouses or whatever. Or if he has a residential property, so the company wants to use it as a guest house and he gets rent against that. So in that particular case, the director, whether is providing rental services, right? So is the company required to charge RCM, pay RCM and claim input tax credit in this respect? No, there is a clarification which has been received, because see, director is not providing this particular rental services in the capacity of a director. He is providing it as an owner. So even if he's not a director tomorrow, he will still provide that particular rental services. So there is no RCM applicable on this. But having said that, we will come to another point that we may be aware from 10th of October 2024, if any commercial property is let out to a registered person and the landlord is unregistered, so there is RCM applicability. We will see in the further slides, entry 5AA of notification 13/2017 central tax rate. So in that particular case, RCM may be applicable, but not as a services received from director. See, let us see this slide. As I was just mentioning, let us see this 5AB, entry 5AB of RCM notification 13/2017. Here we see that if the director, who is an unregistered person, provides any commercial property, warehouse, to the company who is a registered person, here what is the immovable property other than residential dwelling, means commercial dwelling. Now, recipient of service means the company is a registered person. So here the company is supposed to pay RCM, right, of 18% and claim input tax credit. Now let us take another example. If the director provides a residential property, a guest house, to the company, so here the company is using it for a commercial activity. So here the company is supposed to pay RCM, right? So RCM will not be paid under that particular clause of services received from a director, but the company may require to pay RCM, tax under RCM and claim input under this entry 5AA and 5BB. Here I've also provided the with effect from the date from which these entries are applicable. Now, there is a small table also which I made for you. Let us take just a small briefing on this. See, here for residential property, here landlord not registered, means the director is not registered. He has given his guest house for, and the company is using it for commercial purpose. So the tenant is registered, means the company is registered. So the tenant needs to pay under RCM. Yes, Mr. Nikhil. Kindly please go ahead and ask your question. Please unmute yourself and you may ask.
Hi, good evening, everyone. Ishan, I have a question. What if the director, instead of charging director fees, claims it as advanced against salary or any other like changes the description of service. So in
Sure.
that, yeah.
Sure. So, see, it's a very good question. Mr. Nikhil has asked us that in case if the director takes an advance against salary, we need to the audit officer who shall visit your premise, the GST departmental officer. You are going to give a particular contract, an employee contract of the director and the company of a managerial personnel. And you shall prove to him that, sir, the advance which has been received or any amount, remuneration which has been received, that has been received under per se the contract or the charter which is there. In case you are able to prove that this particular amount has been received only in terms of the employment, means can be a bonus, can be an advance against salary, can be a salary, can be anything which has already been provided in your contract of employment. So at that point in time, you have a strong case to tell them that, sir, this is something which is covered under Schedule 3, where there is no supply of service or supply of service or supply of goods. So there, no RCM shall be applicable. In fact, no GST would be applicable. But if it is any commission or if it is any amount which is paid in any other capacity as a professional service, so at that point in time, if TDS is deducted, even if TDS is not deducted, it does not matter. At that point in time, the department will have a strong case against you to charge RCM.
All right. Thank you, Sean.
Sure. Okay, so we are clear up to this point, right? So your residential property, as I mentioned, right now, if the landlord director is giving his guest house for a commercial purpose, the company is a tenant who's registered. The company needs to pay RCM. But if it was not a company, if it for example, if it's your father, my father, he is a proprietor or a partnership or a partner of a partnership firm. And if he does some trading activity, for example, in Bada Bazaar or in some place, some sari trading, but he takes a residential property from a landlord, but he uses it for his own personal residence of his family or for himself. He does not conduct any trading activity there. So in that particular case, there is no GST applicable, less RCM. So no RCM, no GST. It is exempt. Let's come to the commercial property, warehouses, godowns, offices, all of those. Now, what is there from 10th of October 2024? From 10th of October 2024, the director is the landlord, for instance, he's not registered. The tenant is registered, which is your company, right? And if he's using the commercial property for commercial purposes, so the company, the tenant, your company needs to pay RCM from 10th of October 2024 onwards at the rate of 18%. So this has again been clarified. Now, let us go ahead. See, if you're a foundry, so many times you may purchase auctioned items, wastes, or maybe old and used goods from government agencies. Sorry, from central government, state government, not agencies, from the government itself, right? Now, if you do so, let us see what I've highlighted here: old and used goods, waste or scrap, right? Or seized or confiscated goods, which is again auction. Under any chapter, this is not limited to metals or metal scrap or anything. That's a different chapter, 72 to 82, for which and there's TDS applicability, that is separate. But here you were to see if you are purchasing any of these items from the government, excluding the railways. So you are supposed to pay RCM because you are a registered entity. Now, there are a few clients of ours, they're into steel industry. They have purchases from Foundry or something like that. There, I have seen personally a tax demand of RCM tax demand of 2 CR plus interest plus penalty, because from 2017-18 onwards till now, they have not paid RCM on auction purchases from the government. So this alone point can be of multiple CRs. Now there is a particular point which you need to know, that see, any purchases from the Indian Railways, Ministry of Railways, if made after the 20th, on the 20th of October 2023 or after that. So at that point in time, what shall happen is that you are not supposed to pay any RCM on the purchases made from the Indian Railways with effect from 20th of October 2023. But if you have purchased waste or scrap, old and used goods from the railways in 17-18, 18-19, 19-20 up to 19th of October 2023, you are supposed to pay RCM. So this is also a very important point, where I've seen that there are, very simple omissions, and there is a huge demand later with interest and penalty. Now, let us come to this point. Now, sir, if someone were to ask me that, sir, what if you want to be very safe, you don't know all these RCM provisions, every day it changes, it's quite complex. What if we choose certain items we are not sure of, I don't consult with my CA or I don't receive an advice and I voluntarily pay RCM for unnotified services? What are the notified services under section 9 subsection 3, which is in the notification which we saw, notification 13/2017 central tax rate, lawyer services received from lawyer, then what, sponsorship services, security guard services, etc., which we saw, director remuneration. In case out of those 10, 15, 20 services, one service is not notified, for example, labor charge, inspection charges, rental, these are not notified under RCM. RCM is not supposed to be paid by your company, but you voluntarily pay to diffuse the confusion. So what can be the risk here, even though it is revenue neutral? You have paid tax under RCM of 18% and you've claimed input tax credit. So you're paid in cash, you claimed input, and you set off that input against your output tax liability. So it's revenue neutral, right? The government has not received revenue per se because that amount has been set off against your output tax liability and you paid tax. So that input tax credit and output tax liability means your RCM that is set off. Still, there, see this particular discrepancy notice wherein the department says further you have availed. See, these they are saying these are not notified services, not notified under RCM. Even though it may be revenue neutral, your situation, they are saying so you have claimed ITC which is ineligible. So kindly pay this, reverse this ITC, discharge your ITC in form of reversal of ITC because these are not notified under RCM in any of the notifications or not notified under 9 subsection 3 or 9 subsection 4. Right? So you have to be careful. You need to follow the particular notification. I'm again going to repeat the notification number. Notification 13/2017, central tax rate, dated 28th of June 2017. And for IGST, it is notification 10/2017, IGST rate notification. Kindly go through it. Now let us come to this particular big point, which is your, so what about wrongly paid RCM output? Sir, the amount which we have paid wrongly, Mr. Amrut from Prabhat Castings has mentioned, sir, what about the tax which we have already paid? What about that? It's a very good question, Mr. Amrut. Here, what you can do is that when you have paid incorrect tax incorrectly, where there is no authority of law, Article 265 of Constitution of India, wherein if you're paying some amount to the government, which is not per se in the character of tax, so you can apply for refund within 2 years from the date of such incorrect payment. So for example, if I have made payment in 2022-23, for example, 8th of August 2022, so I can apply for refund in RFD 01. There is a category which is excess payment of tax or excess cash payment. So there I can apply for a refund in RFD 01. There is a particular form for application of refund, and we can get the particular refund of excess tax paid or tax or amount which is paid, which is not a tax. But if 2 years pass from the date of such payment, then it will be a challenge for
labor charges. When we adjust wrongly claim the inspection charges unregistered, rent paid for active premises.
It seems Ishan has frozen. His connectivity issues are happening. Let me call him.
I'm sorry, there was some, yeah, can I be heard?
Yeah, we can hear you now. No issues.
Okay, sorry, ma'am, there was some, I think, disconnection.
That it
Can you
is.
see the screen? Please kindly confirm.
No, please share again.
Yes. Can you see the screen now? Can you please confirm? Can you see
Yes,
the
yes,
screen?
we can see.
What was the last point which we which you heard? Did you hear anything about paragraph 5, this RCM on this GTA, or should I repeat this particular point? Okay. So let me go ahead with this point again. So let us understand this point is very crucial, because this point alone can, bring about a lot of demand, maybe 1 CR, 5 CR, 10 CR. So let us understand. See, let us assume that the GST departmental officer has come to your particular client premise, your premise, and he's conducting GST audit. So he is going to ask you for your profit and loss account income statement or your trial balance. He shall go to the debit side of your profit and loss account. There he shall see expenses under the heading of carriage inward, carriage outward, delivery charges, loading, unloading charges, transportation expenses, truck expenses, those kind of expenses which are pertaining to transportation of goods by road. Why are they interested in that? Is because there is a certain provision of payment of reverse charge tax under reverse charge mechanism, RCM, when you take services from a goods transport agency. Just one small point, which I'm going to tell you. So what they do is they don't drill down too deep. They expect you to come out with your answers and clarifications. They are going to add up all the amounts and expenditures in the nature of all of these expenses: delivery charges, carriage outward, carriage inward. Here you can see that they have summed up an amount under all these ledgers of transportation of goods, which presumably as per them is transportation of goods, that is 2 crore 35 lakh 52,000. Now you have paid RCM at the rate of 5% only on expenditure of 1 crore 71 lakh 98,700. So there is a difference as per the department of our short payment of RCM on the amount of 63 lakh 53,290, where 5% of this amount comes to 2.5%, 2.5%, 5% comes to 1 lakh 58,832 each. Now, how do you save this particular amount? We are going to see in the next slides. Now, let me first understand, are we on the same page that this entire amount of 2 crore 35 lakh 52,000 may not be entirely subject to RCM? There may be bits and pieces in this entire amount pertaining to transportation of goods by road, which may not be subject to RCM, maybe a large chunk of it. Let us understand which chunks. Now, see the first point in this particular 2 crore 35 lakh 52,000, I will contest before the department and say that, sir, you are assuming the entire, all these ledgers, you've summed up and you're saying that all of these all of these expenses are pertaining to transportation of goods by road received from a goods transport agency on which RCM is applicable. Let us understand, from 2022-23, from 18th of July 2022, there has been an option provided to a goods transport agency that, sir, either you go ahead and you charge GST under forward charge mechanism. You issue your own invoice, you charge GST. Freight amount is 2 lakh rupees, charge GST of 12%. So basically 12 lakh, 2 lakh plus 24,000, 2 lakh 24,000. You collect the tax, you make the payment. That is one option. Second option is, which has been continuing, which is 5% under RCM. So from your 18th of July 2022, they have been, this particular notification has come out wherein they are saying that, sir, goods transport agency can now charge tax under forward charge mechanism. Now, if the goods transport agency means the truck person, means the person who's transporting our goods, if he is charging tax under forward charge mechanism, he is collecting tax from us and paying to the government exchequer. In that particular case, do we need to pay RCM on the same transportation expense? No, we don't need to, because he's already collected tax and he's opted legally to pay tax under forward charge mechanism. Now, if he opts to pay tax under forward charge mechanism, for instance, for financial year 2025-26, ensuing financial year, what does he have to do? He needs to opt it in a particular Annexure 5. This is an online form where the GTA, it goes to the GST portal and it fills up this form and files this form by 15th of March 2025. Means 15 days before the beginning of the financial year 25-26, an option says what? That, sir, I would like to go ahead and offer charging tax under forward charge mechanism for the entire year 2025-26. Right? So, but then again, there are two options at his disposal. First option is, if he goes for forward charge mechanism, he's collecting tax from us and making payment, so he can charge tax at the rate of 5% also. Whereas if he charges tax at the rate of 5%, 2 lakh rupees freight, 5% means 10,000 rupees. So 2 lakh 10,000 rupees we are giving him He's taking 10,000, he's paying to the government. We are claiming input as a recipient company, Foundry company. We are claiming input of 10,000 rupees, normal forward charge mechanism. Sorry. So here, what is happening is, if he charges 5%, the goods transport agency, he does not claim any input tax credit of his own. If he has a godown, if he has trucks on hire, he shall not claim input tax credit. He, not the Foundry company. Foundry company shall claim input tax credit, which is the recipient. But if the goods transport agency opts for forward charge, he has the option to charge GST at the rate of 12% also. In that particular case, he can claim his input tax credit from his establishment. If he has trucks on hire, he can claim input tax credit for which he has paid to the person whom he has hired the trucks from. He can claim input tax credit against the rental payments which he has made. All of that he can do, right? So what I'm trying to say is that, sir, in this particular case where the GTA is charging tax under forward charge mechanism, we are not supposed to pay RCM. So maybe out of this 2 crore 35 lakh 52,000, 1 crore rupees worth of freight, maybe from those goods transport agency who are charging tax under forward charge mechanism for 22-23, maybe. So we need to dispute and tell the department how are we going to prove to the department? We are going to prove by giving the invoices of these goods transport agency. Now, any goods transport agency who has opted for a forward charge mechanism, like tax collecting under forward charge mechanism, he has to give a declaration in his invoice, which is the freight invoice, that for 2025-26, I have opted for charging tax under forward charge. So kindly, as a Foundry owner, when we are making payments to a goods transport agency, we need to see whether this particular declaration is provided in his invoice or not. If it is provided, he has to charge under forward charge mechanism tax, we pay and we claim input. We don't need to pay reverse charge mechanism under. So that is one safeguard which we can do. Second safeguard, what? Sir, are we aware that all that, see, let us see this particular entry number 18, services by way of transportation of goods. What does this mean? This is exempt. Now, sir, you may be shocked to hear this. I'm talking about goods transport agency. I'm talking about supply of service by transportation of goods by a goods transport agency, that is under RCM forward charge. But sir, let us see this entry under the master exemption notification. What? Notification number 12/2017 for services, right? Central tax rate. Entry number 18, what does it say? It says that services by way of transportation of goods is exempt supply, except by road in the case of goods transport agency. What does this mean? This means that there are many tempo owners, tempo operators, truck owners who are not goods transport agency. What does that mean? They do not issue a consignment note. They just have trucks and tempos, and they are going to give you that on hire, but they shall not issue a consignment note. Sir, what is a consignment note? Sir, this is a consignment note, which we call bill LR. What is a consignment note? Here, consignment note means that the truck operator, the goods transport agency, he shall give you a particular LR, right? And here he shall mention a consignment note number. He shall mention the origins and the destination. He shall mention the quantity of the goods. He shall mention the truck owner registration, right? So, in case if the GTA, goods transport agency, issues a consignment note, then only he is supposed to, he may go ahead with what? With charging either as under forward charge mechanism or reverse charge mechanism, right? But if he is not a goods transport agency at all, if he is a goods transport operator, if he does not issue a consignment note, so the service is exempt. So there may be a huge possibility that this amount of 2 crore 35 lakh 52,000, there may be 50 lakh rupees of such expenditure of transportation of goods by road, which may be pertaining to supplies taken from goods transport operator rather than goods transport agency. So no consignment note is issued. So in that particular case, you can contest and say that, sir, it is exempt and we are not supposed to pay any RCM under that. So you shall again save a lot of money with it, right? Now, are we aware that in respect of goods transport agency, now, for instance, if a goods transport agency, the primary service which a goods transport agency provides is of transportation of goods by road, right? But it can also provide allied and intermediary services such as temporary warehousing. For example, if you're getting your goods from Gujarat there is 200 kilometers per day is allowed when you generate a particular way bill, right? E-way bill. So if it is 800 kilometers from Surat to Bengal, so it is 4 days they provide, right? 4 days for the goods to be transported to your godown from Surat, your e-way bill validity. In case if your goods come within 2 days only. So what happens is that for 2 days there is temporary warehousing at the godown of the transporter, for example, right? So he charges some temporary warehousing charges. He charges some transshipment charges. He charges loading, unloading, packing, unpacking charges. So what I'm trying to say is that there has been a clarification which we need to know that in case if these allied services are also provided in addition to the primary service, which is the transportation of goods by road, the entire amount, including such loading, unloading, and other allied services, RCM will be applicable on the entire amount. In case if RCM is applicable in that case. So it will be treated as a composite supply. So 100 rupees is transportation freight, 50 rupees is loading, unloading. So 150 rupees will be the assessable value on which RCM may be applicable for you to understand this. Okay, now see, there has been an industry-wide issue in respect to Foundry. Now, I have received close to 15 to 16 notices over the last 6 months, wherein I have filed appeals also in these particular cases. What does this case in Foundry, especially in Foundry, in earlier years, 2018, 19, 19, 20, what is happening is that there has been some sort of a, search and seizure, okay, at some transporters' warehouse or godown or office. Now, the investigation team, GST investigation team, they have come out with a diary of the transporter, where in the diary, what is mentioned? In the diary is mentioned, let us take this table. The supplier, who's the supplier? The supplier is Neo Steel Limited. So your place of dispatch is Neo Steel, right? What is happening is that the purchaser is, who's the purchaser? The purchaser is Industrial Iron Corporation. Okay, account is, the invoice has been generated in the name of Industrial Iron Casting, means Neo Steel Limited is supposed to transport the pig iron 10 metric ton, 100 metric ton to the godown of Industrial Iron Casting. But what is happening is that Neo Steel Limited is not transporting or delivering the pig iron to in the godown of Industrial Iron Casting. Rather, it is transporting the pig iron to Chandra Alloy, to, for example, to Ashok Purlia, to some other person. Now, what is happening is that in the invoice of Neo Steel Limited, there is a pig iron of 100 kgs which has been sold to Industrial Iron Casting, but this has never reached Industrial Iron Casting on that day. So the truck went to Chandra Alloys or some other recipient. Now, some other day, 2-3 days later, for instance, another truck came from, for example, Chandra Alloys and transported the pig iron of the same quantity to Industrial Iron Casting. So what is happening is that the GST department, the DG arm, means the intelligence wing of the GST department, they have proof that the pig iron never reached from the premises of Neo Steel Limited. It did not reach the Industrial Iron Casting premises. It did not reach. But they are not taking into consideration that some other days, few days later, maybe a week later, that the equivalent amount of pig iron had actually reached from some others premises, but they are not taking that into consideration. All of these information has been unearthed, discovered from the diary of a transporter during search and seizure. So what is happening is that the particular GST investigation wing is saying that, sir, that Industrial Iron Corporation has availed input tax credit on the strength of invoices issued by Neo Steel Limited without actual receipt of goods. Because they are saying that the goods, the pig iron, has never been received by Industrial Iron Casting. Whereas it may be entirely not correct, because it may have reached sometime later, but then there is no proof about that. So what is happening is that the notices are being issued like in abundance of crores here. So how do you tackle such a situation in case if such a situation comes to you? How do you tackle this? You see now for all of these transactions, if you were to see, these are all linked with these invoices issued by Neo Steel Limited. See, all of these invoices, they have unearthed vehicle number, etc. But these have never reached from Neo to industrial iron casting in that particular date. It has reached later from some other premise, as I mentioned. The total amount of just 7 transactions is 30 lakhs. It may be 30 crores also. So what do we do? How do we prove our cause? If I am Industrial Iron Corporation, how do I prove that, sir, that the pig iron has actually been received by me? How do I prove? I give the purchase invoices. I give the way bills. Are we aware when the way bills came into existence in India under GST? For interstate transactions, the way bills came into existence from 1st of April 2018. For intrastate movement in Bengal, when did it come into existence? From 3rd of June 2018, right? So for all of that period after that, so e-way bills, we can present e-way bills, right? We can even mention vehicle registration certificates with vehicle numbers. See, these are vehicle registration certificates downloaded from Parivahan website, that they are saying that, see, this vehicle number, it was valid. Its registration in 2010. It is still valid. It is insured. This has a permit license. We need to prove to the department that the vehicle was existing. These vehicle numbers are existing. We also need to prove to the department that payments have been made by our bank account to the suppliers, right? We need to prove to the department that these goods have actually been received by us. So we need to give what? We need to give production. We need to give account ledgers of our suppliers. We need to give inventory registers. We need to give a production register. Production register means what? If 100 kg of pig iron was never received by us, how could we make castings? How could we make the finished goods, and how could we send it out? Because we have sold that equivalent amount and we have paid output tax on that. So we need to give all of these documents. So what I am trying to say is that if in any case in the future also, if any of your supplier becomes fake, non-existent, it gets cancelled retrospectively due to any unrelated transaction with any other person, if it becomes cancelled. So what happens is, in many cases, the department says that, sir, your vendor is cancelled retrospectively from 1st of July 2017. So all the purchase invoices on which has been issued by your vendor, on which you have claimed input tax credit, you have to reverse input in all those cases. So in that particular case, what are you going to do? You are going to present with all these information that, sir, goods have actually been received. There should be sale register. You need to create a trail from the point of purchase to the point of sale. So you need to provide all of these details. I mentioned all of this. You can go through all of this. You can also provide the ledger of power and fuel electricity. If the department says that, sir, 10 metric ton of pig iron you never received it in the first 10 days of May 2018. So what are you going to say? That, sir, see, my power and fuel, factory, electricity, ledger, my factory was working. If I did not receive, then how was I in production? You have to prove, right? So these I've already provided. These you can go through these. See, material receipt note is very important. Our foundry clients, we've always consulted with the foundry clients, and we've mentioned that, sir, whenever goods are being received at the factory gate, kindly ask your guard to issue a material receipt note. So if you issue a material receipt note, you stamp the date, you mention the challan number, road challan number, you mention the bill number, you mention the PO, you mention all of these things, right? And it becomes an evidence that as on that date, that the goods have actually been received, right? Now, as I mentioned, that there are many appeals which we have filed, where in a particular case where the department is disputing that the goods have never been received by foundrymen, right? Because of many cases, as I mentioned, diversion of pig iron to some other vendor, or maybe your supplier has fallen fake or non-existent. So you can rely on all of these grounds. We have won appeals also based on these grounds of demand which is in crores. So you can rely on these. I've mentioned these. You can go through this later. Now, let us see this particular point, similar to the point which we have discussed. Now, the department is saying that, sir, we have tracking of all the toll points, of all the checkposts. So your truck, which you claim your pig iron to be transported during this time, we do not see any truck movement or passing of this toll point. For example, from Jharkhand, Singhbhum, here, pig iron was being transported to Lilua, your factory here. Now, there are toll points there in Havra, there are other toll points at the border. Now, if you say, if they say that, sir, the department says that the goods have never been reached, goods have never reached your particular premises, you are going to present the department with all of these documents and details which I have mentioned to make your case. But the department can anytime contest as per their DG arm, their intelligence, and they can say that, sir, the truck has not passed a toll. So you have not received the goods. You have violated section 16, subsection 2, clause B, which is one of the conditions to claim import, which is receipt of goods in your factory. So that has not happened. So kindly reverse total amount of what? What is, how much is this? 19,22,000. Can you just see the amount? 1,57,000. This is real life notice. So you have to prove, keeping all of these documents, material receipt notes, and you have to establish a proper trail that, sir, we have not only received the goods, we have made castings, we have made finished goods, and we have sold it. Now, there is again one more thing. As we see in foundry clients, it is a bit unorganized. When the goods are received, there is no material receipt note, there is no recording in any physical ledger in your factory. There is no, what do you say, road challan. There is no payment slips. Many people, many clients of ours, or previously, which I see in the foundry industry, for previous years, they are still not maintaining till today. Payment slips means Tata slips, which we say that once you load the pig iron on your particular truck or your goods transport agency, any vessel or anything like that. So before that, you have to take it to your weigh bridge, and there is a payment slip. So that is a very important document from the supplier side, as well as when it is entering your area, you again get it weighed and then you take it in your factory gate. Many people, they don't maintain or they don't keep it for 72 months. You need to keep all your documents related to your case for 72 months. That is 6 years, right? So they don't. And what happens later is that the department disputes that the goods have never been received and you don't have enough documentation.
Assembly
So here, yes, sir. Tell me.
direct
So do you have any question? Chocolate Industries, the representative, sir. Okay. Can I proceed?
Mute করে দাও।
Okay. Kindly mute it, sir. Okay, so here what is happening is, sir, in this particular case, related case, what is happening is, let us see this particular notice. What is happening is the purchase invoice is dated 24th of May 2022. Right? Now, what is happening is, since you don't have a material receipt note, you don't have the exact date of receipt in your factory gate, you don't have a particular register, store register, you may not have a road challan properly, you may not have payment slip, you may not have other records, that which is the exact date wherein these pig iron or these raw materials have reached your godown. So what happens is, the department becomes cherry pickings for them during departmental audit. And what they see is that date of reaching, they assume to be the expiry of your way bill. Your way bill is being expired next month on the 4th of June, but your purchase invoice is dated on 24th of May. Your goods may have reached on 28th or 29th of May, but you don't have a proof. You don't have these documents. So when GST departmental audit happens and you have claimed your input tax credit in the month of May itself, which rightfully you have because you have received the goods at the end of the month, but they are going to assume that since you don't have any documentation, the goods are receiving on the last date of the expiry of your bill. So they are going to ask you to pay interest of 18% per annum for early claiming of input tax credit by a month. So that will be 1.5% of your entire input tax credit claimed in respect of this transaction. That becomes a big amount, as you see. So if you were to see, so here in all of these transactions, these are the last 5, 7, 10 days of the month, wherein there is a crossover to the next month for the expiry of your way bills. So in those cases, please kindly maintain all of these documentations. Take photos of your truck. Take photos of, there should be CCTV cameras. There should be other evidences also that the goods or the truck, they have reached your factory gate at the end of the month. So you have claimed input tax credit in the correct. Now, let us understand this another related issue. This is also a very crucial issue. Non-maintenance of GRN, which I've already mentioned. This is a GRN, as I've already, this is goods receipt note. This should be issued by the guard or this should be issued by the store manager, right? Now, non-maintenance of inventory. Or let us see what has happened here, sir. In foundry industry, specific to your industry, this is widespread issue. What is the widespread issue? That in your Tally, Busy, Oracle, SAP, whatever accounting software you are maintaining, there you have not input or provided the source consumption raw materials, whereas there is a production entry and there may be a destination production output mentioned. For example, your cast articles were made, but from where? Pig iron is not mentioned here. So in your books, what has happened is the raw materials are not provided, but the goods have actually gone on the floor, production floor, and the castings have been made, finished goods have been provided, have come into existence. It's there in physical stock. And in your books, it is there, but there is no raw material against it. It may be an issue. See, alternatively, destination production missing. You have your raw materials, non-malleable cast iron, these other items, but you don't have your production entry passed as on that date. Now, see the third issue, what happens in your foundry industry. Here, these are unrelated raw materials to unrelated finished goods. Here it is mentioned wooden crates. Here it is mentioned non-malleable cast iron. Here, for finished goods is mentioned iron crate packing. So wooden crates may not be relevant for this, but due to some mistake, there has been a wrong correlation between the raw material and the finished goods. What is the consequence of this? The consequence is search and seize. In case, if there is any search and seizure, sir, this is a particular search and seizure case of our client, more than 8 crores worth of material in the foundry industry. This was seized by the department, but they had some other tip that they were purchasing goods from suppliers who were fake, but that's an unrelated case. Once they entered the premise of the client, they see that there is a lot of mismatch between what? Column D and column E. What is column D? Column D is your book stock, number of goods closing stock as on the date of search and seizure or inspection by INS-01. Inspection happened on 18th of March 2025, few months ago. This is a real life, real life notice, in fact. On 18th of March 2025, the GST department anti-evasion wing, they entered our client premise and they said that, okay, fine, sir, we have got a tip, we want to reconcile your physical stock with your books. Now the physical stock is column E, number of goods physically found on 18 March 2025 at your additional place of business, and your actual stock in your books. Now see, let us see this particular wooden chair standard. Now you have not provided, what have you not provided? You have not provided production entries. So because in the books 230 units of finished goods is not mentioned, it is only 1 unit. And in actual, when they were doing the actual counting, they found 230 units in finished quantity. So they are saying that 230 units of finished goods is available at the factory premise, but it is not recorded in books because you have not passed your production entry. They have seized 229 of it. There was only 1 recorded in book. So 1 they left, they released. This is number of goods found to be released. This is confiscated. They further confiscated. So what they did not do, they did not pass this entry. They did not pass this entry. They did not pass in the books the production entry. So in the books, the closing stock of finished goods was not provided, but in actuality, in physical counting, they found and they seized as much as they found, which was not recorded. And it was to the tune of 8 crores. So this can be crucial again. Now, tooling cost. Are we aware of what tooling cost is? In foundry line, there are many times exporters that what we are doing is we need to make molds and dies of our foreign OEM, foreign clients and customers. They want, for example, manholes, or they want certain casting items, and they are going to send some patterns or something, but you have to incur your cost and you have to make molds and dies, for which they are going to make payment. So the amount received against making molds and dies, right? It is these particular amounts received on these particular dates. Now, what is happening is that to make these molds and dies, to eventually make 20, for example, 20 lakh manholes, to export 20 lakh components of manholes, you need to make molds and dies of 100 kg. For that, you receive amount against your tooling cost, which is a foreign inward remittance. This is being received by the foreign client. Now, what happens is, right when you receive any amount against a tooling cost against making of molds and dies, which are used to make manholes, which you eventually export. What happens is you are receiving consideration against making of molds and dies, which is tooling cost, and not your eventual manholes which you're exporting. So what happens is many clients of ours, foundry exporters, we have seen this mistake that they are classifying these foreign inward remittance and this tooling cost as export of goods. This is not export of goods, sir. This is not export of goods, because for export of goods, what is the definition of export of goods under GST Act? Section 2, Clause 5 of IGST Act. What does it say? Any goods which is taken outside the territory of India. That is called export of goods. Here, the molds and dies which you made of 100 kgs to make your further manholes for exporting, have you taken it outside India? No, you've not even taken it outside your factory gate in Havra or wherever your factory is. So in that particular case, you have made, what have you made? You have made your molds and dies at your factory gate, and you have constructively handed over the ownership for which you've received the amount from the foreign client. You've constructively handed over the ownership of this mold and dies for which you've incurred the tooling cost at the factory gate. So it is, what is it? It is basically tools and dies invoiced to foreign buyers but retained in India. So what will be the place of supply? In this case, the place of supply shall be in case where the goods are not moved, where the goods are, the place of supply in case of supply of goods, where the goods, there is no movement. It is the last location of the goods, which is again the factory gate in Havra. And you, as a foundry exporter, you are the supplier of this molds and dies. So you are the supplier. Your location is again West Bengal, Havra. Place of supply, West Bengal, Havra. So there is an incidence of tax of CGST, SGST. This is not an export transaction. This is not a zero-rated transaction. This is a domestic supply on which you have to pay CGST and SGST. Place of supply is determined as per Section 10, subsection 1, clause C. So you have to pay what? CGST, SGST on this entire amount. CGST, SGST, that is 2,78,521. This entire amount is your tax liability. Whereas you may have thought all this time for the last 3-4 years until the audit opens up that, sir, this is export of goods. No, it is not. So in this case, if you were to see, amount was received on 13th May from the foreign, or from your foreign customer towards your tooling cost, molds and dies, and you, what did you do? You paid CGST and SGST 1 year later, 1.5 years later, 518 days of delay. So you have to pay interest as well. So you pay this interest and you pay this particular tax. Now there can be tax planning which can be done in this, because this, your foreign buyer is not registered under GST. So if you charge 18% from him, and if you pay to the government, he will not pay 18%. You may have to pay 9% out of your pocket. So it may be very detrimental for your global competitiveness. So there are ways where you can plan tooling costs to be export of either services or export of goods. Now, first tax mechanism, we'll just go through it briefly. First tax mechanism is where what you do, you split the particular contract wherein if molds and dies or patterns which you're making, if you can classify more than 50% of this molds and dies tooling cost to be what? A supply of service. So if you make it supply of service, means you will say that's a drawing and whatever, making patterns, or the service element of this molds and dies, this tooling cost is more towards the primary element is supply of service. So in that particular case, this incidence will move from export of goods to export of service. So for export of service, you don't need to, obviously it's intangible, you cannot take it outside India, right? So for export of service, there are few conditions under Section 2, Clause 6 of IGST Act, which you need to satisfy, which is what? The supplier of service needs to be in India. We are the supplier of service, right? Exporters. The recipient of service, which is your client, he needs to be outside India. The place of supply of goods, it needs to be outside India, right? And what we need to receive amount in consideration in foreign exchange, right? So these are few conditions. If we satisfy, if we say it is a supply of service, so it can be treated as an export of service, a zero-rated supply of service. So you may still save your CGST and SGST this entire amount, but this is again disputable. You need to have a proper contract made and everything. Also, another mechanism can be that you don't take separate money for your molds and dies or tooling cost. You take it under one composite contract. When you export your manholes, which you make using your molds and dies, so you take one consolidated amount and you classify it as zero rated supply of manholes, your components. You don't take these particular amounts. So in that particular case, it will be treated as one composite contract, whereas the primary supply will be the supply of manholes, the supply of components for export. So what will that qualify? That will qualify as zero rated supply of manholes, and there will be embedded cost. There will be embedded cost. Like see this one, for example, if the mold and dies cost is 100 rupees, I'm going to make 50 manholes. So the amortized cost of molds and dies per manhole is 2 rupees. Plus the manhole cost is 1 rupee. So 3 rupees I'm going to charge from my foreign customer. So this 3 rupees will be my export proceeds, right? So this 3 rupees will be my export proceeds. So I'm going to amortize per unit component price. In the per unit component price, I'm going to embed the cost of my molds and dies in this. So in that particular case, you don't need to have a separate tooling invoice. So in that particular case, you can save the tax incidence on your tooling. Is there any question till here? Please kindly confirm. Is there any question till here, or can I proceed further?
Hi, Ishan. I have a question.
Yeah, Mr.
There
Nikhil.
could be a practical case where, in case of GTA, on the toll plaza, like the tag doesn't work, and you need to pay cash, double the amount of cash,
Hmm.
right? And in most of the cases, it has been seen that the department doesn't consider that those receipts, or in that
Hmm.
case, or otherwise,
Hmm.
the receipts are not being maintained.
Hmm.
So, what would be the possible outcome of that?
So see, at that point in time, Mr. Nikhil, this physical receipt, this one, here they are saying that it has not crossed the toll, right? Because see, FASTag came from 2019. So as it is before 2019, they don't have any such FASTag record. Now, if you were to see currently, if this is the case, so you will have to depend again on all of these documents, your facts and circumstances of the case for which I have provided you. You need to, if they say that you have not received these goods, you need to show them that your material receipt note. You need to show them your payment slips. That sir,
Or
this has
the
actually been
emphasis would
received
be
because
I'm sorry, I'm cutting you. The emphasis
yeah,
will be more on other documents, right?
other documents. Yes,
All
yes.
right.
Again, you can take photos. You can have a protocol in your factory that whenever a truck comes, you take a particular photo. Or in such exceptional cases where a toll receipt is not provided or these receipts are not accepted or something, take a photo of your factory
All
gate
right.
and so that you can have a timestamp basically. But it's very crucial for you to maintain all of these documents or most of.
All right. Also, like to continue with my question,
Hmm.
there could be a case where like a company had applied for a refund, and
Hmm.
during that processing of refund, it was seen that the a vendor of the same company, say for example, you're the company and I'm a vendor of
Hmm.
yours, you had claimed, say for example, a crore refund, and department, and then you come to know that okay, Nikhil was paying taxes with respect to GST till June, or say May, and due to some reason the registration got cancelled retrospectively. In that
Hmm.
case, how would you approach, like in the department, like there is a liability on you to just pay say 20 lakhs.
So, see, Mr. Nikhil, this is a very good point which you have mentioned. We are again going to rely on all of these. And there are many, many case laws, which I personally filed more than 30, 35 appeals on the basis of corroborative evidences. So there are many case laws, Sanchita Kundu, LGW Industries, there is the case law of your Supreme Court also in your think sunlight or suncraft or something, suncraft energy, which came out I think in 2023 December, wherein they say that in case if you are able to prove that you have received the goods in your additional place of principal place of business on the basis of all of these documents, there is also an e-com gill Supreme Court case law which the department relies on, which the particular Supreme Court categorically mentions that if the assessee is able to prove by his documents, and it should not just be purchase invoices or e-way bill, it should be much more than that. Vehicle numbers, it should be it should be the narration from the drivers, it should be your production register, inventory register. You need to your highlighted bank payments. You need to have all of that. And in addition to that, the legal point, you need to have many of these case laws. For example, you can have no investigation conducted to establish actual non-receipt of goods. This is from your Sestat from your Ahmedabad. So there has been no investigation at my factory. There has been an investigation at your supplier's factory, and he's absconding. He's gone. He is either fake or he's cancelled retrospectively. He's not filed his GST or 3B return for 6 months. So all that incidence comes on you to reverse. So there are many grounds of defenses wherein you can say that as per there is a press release also wherein they say that only in exceptional situations that the recipient can be asked to reverse his input tax credit. Otherwise, if the tax has not been paid by the defaulting supplier, you should catch the defaulting supplier. There should not be automatic reversal of input tax credit. Plus, Suncraft Energy, as I told you, Supreme Court, there are many case laws. I mentioned also several here, So you need to contest. See, the department, in my personal experience till now, the department is not leaving fake invoices cases. They are not giving favorable judgments up to even the appeals level. The first appellate authority, which is a joint commissioner, additional commissioner. They now, when GSTAT, which is a GST tribunal, when that will be formed, it is already in the process. In the next few months, we are hopeful to have it started functioning. So at that particular point in cases, that's the last fact finding authority, the tribunal. You should present your case with all of these documents, and you should prove that, sir, goods have been received. I don't care about the supplier. He may be fake. He may be indulging in some whatever transaction. Kindly give some evidence of collusion. Where is the evidence? I have discharged my burden of proof under section 155. Now the department has to counter it. So there are many case laws. You can contest, but unfortunately, up to the appeals level, we are more often than not, we are receiving adverse these particular orders. So we have to wait until the GSTAT kicks in and gives a particular favorable ruling, which can be a precedence for these kind of things.
All right. Thank you, Ishan. Thank you so much.
Thank you. Is there any other question or should I move forward? Okay. So let us see this particular case. See, foreign banks, I see many of us, we are exporters, foundry exporters. Now, what happens is, this is a very practical case. What is a practical case? I have exported to the US. Now, my US foreign importer, my client, okay, he's paying in US dollars. So he has a bank account in Bank of America. Now, Bank of America does not have a Vostro account in SBI Kolkata, for example. So what does it do? It engages an intermediary bank. Like, for example, Morgan Stanley, Barclays or something, and in which he has a Vostro account, Bank of America. It transfers the amount there, and that intermediary bank, he has a Vostro account in SBI Kolkata. He transfers that amount here, or maybe in your foreign exchange, for foreign currency account. Now, doing all of this, the intermediary bank charges some amount. Some amount is deducted, and the net amount comes to our foreign currency account or maybe to our INR. Now, this particular foreign bank charges, which you may say, or the department may contest, ideally you should record that as an expenditure in your debit side of your PL, foreign bank charge. Now, once they see foreign bank charges, means there has been a foreign inward remittance against which there has been some sort of a deduction. So what will they contest? They will contest that, sir, this is import of service. Now, if it is an import of service, if they are able to prove it is an import of service, RCM will be applicable as per entry number one of your notification 10/2017 IGST rate, which is your RCM notification of IGST. What does it say? That the foreign bank is the supplier outside India, the Indian recipient foundry company is in India, and the service, the category of services is any service provided by any person, foreign bank who is located in a territory outside India, right? So here they will say that, sir, RCM will be applicable because it's import of service. So how are we going to defend that? See, the amount, just imagine there's a real life notice. the value of service means this much amount was deducted over the year, 17,62,000, on which they are saying entire amount is import of service, because the supplier of service, the banking service which you are being receiving, intermediary bank, is located in the US and you are in India. And place of supply is default provision of section 13 subsection 2 of IGST Act, which is the, what does it say? The default provision. What does it say? Default provision is section 13 subsection 2. I'll just show you. The default provision is section 13 subsection 2. Yeah, the default provision. Now, what happens is section 13 of IGST Act, it says, it talks about the place of supply of any service in which either the service provider or the service recipient, service provider means the bank, foreign bank, or you, one of the parties is outside India. So section 13 of IGST Act, it says that I am going to determine the place of supply. For an import of service, place of supply needs to be in India, import. So if the service provider is outside India, service recipient, we are in India, and place of supply is in India, it is an import of service as per section 2 clause 11. Section 2 clause 11, this one, place of supply. We need to prove this place of supply of service is not in India, it's outside India. Once we are able to prove this, then we are able to prove that this is not an import of service and RCM is not applicable. How do we do that? So there is, the default provision is section 13 subsection 2, which I told you, right, of your IGST Act, which says that except the services which are mentioned in section 13 subsection 3 to section 13 subsection 13, right, of your IGST Act, if your service does not fall under any of these specific sections, your default provision is that the place of supply of the service will be the location of the recipient of service. The recipient of service of banking services, you in Howrah, Foundry company. So place of supply becomes Howrah, you in West Bengal. So place of supply becomes India. So import of service happens, and then you are to pay RCM. So we need to prove place of supply is outside India. How do we do that? We go to section 13 subsection 8. See, I told you default provision is section 13 subsection 2. It says that if your case does not fall in any of the cases between section 13 subsection 3 to section 13 subsection 13, then you come under default provision. Place of supply is the recipient, location of recipient is me, and that again becomes import of services. So section 13 subsection 8, what does it say? It says that in case of banking related services where you have a bank account in that bank, the place of supply is the location of the bank. So in case if you have a bank account in your intermediary bank or your foreign bank who is charging all these charges, then you can say that, sir, the place of supply is not the default provision, section 13 subsection 2, which is my location in India. No, it will be the location of the bank as per section 13 subsection 8, location of the bank. Once you say it is the location of the bank, then it is not an import of service. You don't need to pay RCM. So whenever there is a ledger of foreign bank charges in your profit and loss account and an audit is happening, you need to bifurcate these charges. There may be many charges in which you have your bank, you may be having your bank account. In case if you do have, you don't need to pay RCM because you can take the benefit of section 13 subsection 8 and prove your place of supply to be outside India. First. Second thing is, in foreign bank charges, there may be many charges which are being charged by an Indian bank on which they are charging GST under FCM. You don't need to pay RCM on that. So I saved my client 17,62,000, 3,17,000 of IGST by just using this provision. That it is not an import of service. So you need to be careful about this. See, again, let us see, are we aware of foreign exchange gain and loss account? Many people have this confusion that, sir, whether GST is applicable on foreign exchange fluctuation account, which is foreign exchange gain or foreign exchange loss account. Now, let us see this particular transaction. This is an export sale, which we are doing as a foundry owner, right? So which rate do we take? We take a CBIC reference rate, which is there for 15 days. Whenever we make an export, that amount, that rate is mentioned in our shipping bill. We all are aware of this. Right? So that rate is 82.9. It is notified by the CBIC. So my sale is in US dollar 34,453 into 82.9. That is 28,56,160. This is my export proceeds, which is there in my shipping bill, which is there in my tally or in my busy or in my accounting software, which is also there in my GSTR1 and GSTR3B. So this is my sale amount, right? Now, when I receive the amount, when I receive my inward remittance at that point in time, the bank rate or the RBI reference rate for my accounting or the bank rate for conversion of USD to INR is 84.82. It was earlier 82.9. Now it is 84.82. So the difference is my foreign exchange gain account. So I have received the entire amount against my export proceeds 2856,160. I have received it. This is receipt. This is receipt voucher. And here I have recorded a foreign exchange gain account, right? So this account is closed. Now, is GST applicable on this? Many GST officers ad hoc, mindlessly, without application of mind, they apply GST on this, saying it is a sale or it is an export proceed with payment of IGST. So where have you paid IGST on this? But this is not your export proceed. So we need to understand there is no GST element on foreign exchange fluctuation account. Now, for example, if we make some casting, okay, or manhole or some sort of an item, and we send it across to the UK for testing, for management and certification service, that the particular foreign importer, he wants to test it, certify it, and see that, okay, grade is good. It's A++, it's more than 56%. And then you send the entire consignment, right? So the charge, he's not going to pay for it. You are going to pay for it, right? So there will be an invoice in your name from a foreign party, from a UK party, BSI Assurance UK Limited, and he will mention management and certification service. And you are having an outward remittance. Please be assured that the GST department will keep a track of inward remittance, outward remittance. If you are giving any outward remittance, they are going to ask you, sir, whether this has been shown as your zero rated sale or what is this? Or if it is an inward remittance, we are going to see outward remittance can also be what? Import of service, that you are being provided a service from a foreign party and you are making payments. So it's an outward remittance, right? Inward remittance is in regard to export proceeds, right? They are always going to keep a track. Their more interest will be on outward remittance because they are going to link that with inward import of service. So in this particular case, you are making payment for certification charges where the goods were sent to the UK physically and the testing happened in the UK. And what does the department say? Sir, you have made payment to a party in the UK. You have imported service, section 13, subsection 2, default provision, that the place of the place of service, the place of supply of service is the location of the recipient, which is you in Havra, West Bengal, or wherever your location in India. So it's an importer service. Kindly pay RCM. You pay RCM of 1,20,000 rupees on just one party. There may be 10 parties. So you pay 12 lakh rupees. That's a big amount. We can do some sort of a structuring here. What is the structuring? What did I mention? That section 13 subsection 2 is the default provision. But if you are able to convince the department that your case of service, export of service, it falls in the section 13 subsection 3 to section 13 subsection 13, then the place of supply may be a place which is apart from India, which is the recipient, which is you. It can be outside India. And in that case, it will not be shown as an import of service. You will not have to pay RCM. So we have taken the benefit of section 13 subsection 3 to determine the place of supply in case of where the goods are actually performed in respect of goods which are required to be made physically available to the service provider, right? So here what has happened is I am providing the goods to the UK, and there they need the goods to be physically available, and they are providing their certification charges, their certification services. So here we can say that for this service, the place of supply for this management and certification charge, the place of supply is the location where the services are actually performed. It's performed in the UK. So the place of supply is UK. It's not in India. So it's not an importer service. So you can save that amount. Now let's come to this particular point. We are all aware of export ocean freight and import ocean freight. What is export ocean freight, sir? From 1st of October 2022, we are aware that whenever we are exporting goods and we are making any freight to a shipping line, which is an export ocean freight, right? So we have to, the export shipping line, the shipping line who is going to carry our goods from India to somewhere outside India, if it's an Indian shipping line registered in India, it shall charge GST, right? We are aware of that, right? So we are going to pay GST and we are going to claim input tax credit. Now, in case where if it is a foreign shipping line, and if we are engaging a foreign shipping line to export our goods, to transport our goods by the ocean to the US, for instance. So what is happening, sir, here? What is happening? Let us understand. The department will try to show this as an import of service and will try to extract tax under RCM in this case as well. How will the department do so? Let us see this particular case, export ocean freight. Now see, before that, let us see the context. What did I mention? I mentioned that whenever there is one party which is outside India, which is the foreign shipping line, he's the service provider. I'm the service recipient of export ocean freight, right? Ocean services, the freight services. So Section 13 of IGST Act, it determines the places. Section 13 subsection 9, there was something called Section 13 subsection 9 of IGST Act. What did it say? It said that the place of supply for an ocean freight transaction will be the destination of goods. So in case of export of goods, destination of goods in all possibility will be outside India. So place of supply will be outside India, and it will not be an import of service, because for an import of service, what makes an import of service? We have just seen that the foreign shipping line should be outside India. Yes, we foundry owner should be in India, and the place of supply of ocean freight services should be in India. Now earlier, the place of supply for export ocean freight was the destination of goods, which was outside India in case of export. This is cancelled. When is this cancelled from? From 1st of October 2023. So, sir, please be very, very mindful. From 1st of October 2023 means 23-24, 24-25, and ensuing year 25-26. In all cases, when we are engaging a foreign shipping line to export our goods from India to a place outside India, we become the importer of service of the foreign shipping line, means export ocean freight. We are the importer of service, even though we are the exporter of goods. So we become the importer of service. Why? Because this particular section has been deleted, that the place of supply will be destination of goods, and the default provision has come in. The default provision which we mentioned, Section 13 subsection 2, place of supply shall be the recipient of service, which is foundry owner in Howrah, West Bengal. So foreign shipping line registered outside India, service provider, service recipient, we are the service recipient, ocean freight recipient in Howrah, West Bengal, and place of supply is our location. So we become importer of service, where we are the exporter of goods. When we engage foreign shipping line, we have to pay RCM at the rate of 5% on 1 crore, 2 crore, 5 crore, 10 crore of ocean freight from 1st of October 2023. This is extremely important. But in case of an Indian shipping line shall charge GST under forward charge mechanism. We shall make payment and we shall claim input tax credit. There is no incidence of RCM in that. Now, let us come to import ocean freight. For import ocean freight, again, the same concept we are going to apply. The department will again try to catch you and say that, sir, this import ocean freight, where you are importing goods from outside India, you are the importer of goods, you are also the importer of services. If you engage any foreign shipping line. So here, the department will again catch you and say that, sir, you are making payment to a foreign shipping line. For example, let us take an example. We have a FOB contract. What is an FOB contract? In case of import of goods, FOB contract, when we are the importer of goods, if it is an FOB contract, what does this mean? This means that I have to engage personally, Indian foundry owner will engage a Indian shipping line or foreign shipping line. Let us take, for example, I engage Indian foundry owner. If it's an FOB import, I'm going to engage a foreign shipping line, right? And in that case, what happens? That once I engage a foreign shipping line to transport my goods from US to India, I am the importer of goods. Again, the foreign shipping line is registered outside India. It's a service provider outside India. I am the service recipient in India. And the place of supply, what shall be the place of supply? The recipient of services. Default provision, Section 13, subsection 2. So I am going to be the place of supply for this import ocean freight will fall again in Howrah, West Bengal. So this will be an import of service under Section 2, Clause 11. So I am going to pay RCM. The importer shall pay RCM in FOB contracts when I engage a foreign shipping line. But if I'm engaging a foreign shipping line for a CIF contract, what is a CIF contract? A CIF contract in import is when my foreign exporter, when my foreign supplier, he is engaging directly a foreign shipping line on my behalf, and he's charging the freight, insurance, all that amount in from me, right? I'm going to make payment to him. So in that particular case, what happens? There has been a Supreme Court judgment in Mohit Minerals in 2022, wherein the Supreme Court has struck down this particular entry of from your RCM notification of 10/2017, wherein they are saying that in case of CIF contracts for importers, Indian importers, CIF contracts, the Indian importers do not have to pay RCM for the import ocean freight, because when you are importing the goods, when you are filing the bill of entry, so you are paying IGST on the goods, right? When you are importing, when you're clearing it for home consumption, so the value of the goods already has freight, insurance, and cost of goods. So why am I going to pay again RCM on the freight amount? It will be double taxation. So that's the main concept. So what is the lesson here for a Indian importer? If you have FOB contract from a foreign shipping line, we are going to pay RCM as an importer of service of import ocean freight. But when we are engaging a foreign shipping line for import of goods under CIF contracts, so in that particular case, we don't need to pay. We don't need to pay RCM because this has been struck down. This particular entry number 10 of notification 10/2017 IGST rate, this notification has been struck down by the Supreme Court, right? So see, this particular notice the department has given, even though the Supreme Court is the law of the land, they know it, but still the department, to create pressure on your mind, they have mentioned this, and they have tried to extract money. They have tried to charge wrongfully that, sir, you are the importer. In case of also CIF contracts, you kindly make payment under RCM, which we don't need to pay. Sir, block credits. Now, this is a real life notice. What happens is that when you receive a GST departmental discrepancy GST audit sheet, there what they do, this is a GST discrepancy sheet received during a GST departmental audit. Name of supplier, Okri at home. This is what does the GST inspector do while scrutinizing your records? What does it do? It takes your GSTR 2B, your purchase ledger. They will see, oh, acha, you have a purchase entry from Okri at home. Okay, this is the GSTN. They are going to punch in this GSTN number on the GST portal, and they are going to see the description of the HSN, first HSN, or with which this Okri at home is registered. So the HSN, they are going to see other furniture and parts. Oh, acha, this is other furniture and parts. So this may be for personal consumption. So they are going to ad hoc put it in this notice, and they are going to say, sir, prove to the best of your ability nexus to your business activity. Then only I shall allow this input tax credit. Otherwise, this shall be ineligible under section 17 subsection 1, right? That this is not for your business purpose. Air or vacuum pumps, all of these. So these are all the descriptions of HSNs for your suppliers, right? Where the department they have done, but you have to prove. You can claim input against all if you are able to prove. Now, for example, let us see this fittings, doors, and windows. Now, Home Enterprise, we have a purchase invoice from Home Enterprise of 495. Okay. Now, let us take this. Let us take this. Jai Ma Durga, this is a big amount, 85,000. So what have I taken? Asbestos, this other corrugated sheets, etc. Now I have tried. What have I tried to do? I have taken these asbestos sheets, windows, frames, and I have made some sort of a renovation in my office, lightings and all that. I have made certain renovation, and when I have done renovation, addition, and all of these in my office on my own account, I have capitalized this amount also. It's a big amount. I don't want my profit to get affected or downward impacted. So I have capitalized this amount as cost of improvement. How much amount? Say 2 lakh rupees of cost of renovation, cost of improvement, where I bought furniture, I bought lights, I bought fittings, etc. Now, the moot question here is that when the department contests and says that, sir, lamps and lightings, these furniture, etc., all of these, they are block rated. And if they say that, sir, if you have capitalized it in your books of accounts, if they see it in your fixed asset register, and if it is in the nature of immovable property, for example, if you have done false ceiling, and if you have put all of those steel bars, aluminium sheets, bars, or if you have some sort of a wooden your window frame, right? Or some sort of an HVAC, means heating, ventilation, cooling, right? Your centralized AC, that's fixed. All of these are fixed or attached to a permanent fixture, which is your building. And if you have capitalized it, the department can invoke block credit section of section 17 subsection 5 clause, and they say that, sir, that if it is capitalized and if it is in the nature of renovation, construction, addition, alteration, and if you have incurred it on your own account, this is block credit. But on the flip side, if you say that, sir, I have not capitalized it, it does not go to my fixed asset, it goes to my repair and maintenance. I've expensed it, I've debited my PL account. So in that particular case, if you are able to prove your nexus to your business of sand, cement, stone chips, etc., so you are still able to claim input tax credit. This section will not be attracted, and with this particular logic, you can save lakhs and crores of amount of your ITC, and you can plan it also accordingly, right? So what is the moot question here? If you expense some amount which is going to be a fixture to your immovable property like paint or your loft or your fixed furniture, so you may expense it. If you expense it, if you're able to prove business nexus, you may still be able to claim that input tax credit. But if it is capitalized and if it is in the nature of immovable property, then it becomes a block credit. So you can go through each and every point of this, and you can plan. For example, if you're buying furniture, movable furniture, you can claim, even if you capitalize it, you can still claim that input tax credit. Only in case of immovable property, when you capitalize it, you cannot claim input tax credit. So one planning can be, whenever you buy a furniture for office, kindly do the delivery address, shipping address, billing address, all of office and not of your house. Now, are we aware of this particular provision, 180 days? That is 6 months. Is there any question? Can I proceed? Is there any question? Okay. So, are we aware of this particular provision, that is rule 180 days? Mr. Rajkumar, do you have a particular question, sir? Sir, you're requested to please mute yourself in case you don't have a question. Thank you. Now, see, for example, for this particular clause, this is a real life notice again, which is that if you do not make payment to your supplier of the value of supply and the payment of GST within 180 days from the date of your invoice, so at that point in time, what happens? You need to reverse your input tax credit and you need to pay your interest from the date of availing such input tax credit. For example, let us see this particular notice, wherein the actual amount, here see the date of availment. Now the date of invoice is 4th September 2021. I have claimed it in my GST at 3B for the month of September. I claimed the input on 20th of October 2021, right? And I have not made the payment. I have made the payment 2 years later on 6th of December 2023, which is after 6 months, after 180 days. 180 days end on what? October, November, December, January, February, March. So if after 4th of March 2022, if I make the payment of my value of supply, this total payment, 2,71,234 to my supplier. So at that point in time, I need to make payment of interest. When do I calculate the interest from? I shall calculate the interest from the date of availment of my ineligible input tax credit. But if I've already made the payment 2 years later also, I don't need to reverse my input tax credit because I've already made the payment of tax along with the value of supply. But I shall have to make payment of interest, definitely, from the date of incorrect availment till the date of payment, actual payment to my supplier. And this becomes my cost because I cannot claim any input against it. And this is to be paid by cash. So there are many notices where I mentioned, see, this is one, just imagine, this is just one party, Sri Hari Industry, one party. In that one party, the particular client in the Foundry line, they have made payment after 2 years. The invoice was of 2018. 6 months elapsed in June 2019, but I made the payment in 2021. So only the interest amount comes to 3,04,000 out of only one party ledger. So this can be a very draconian section. This particular section is section 16 subsection 2 second proviso, read with rule 37. This needs to be complied with. Now, let us come to this. Now, see, if we are writing off our sundry creditors, means we are not making the payment at all. So in that particular case also, if we are remitting a liability, so in income tax, we have a section 41, subsection 1 of Income Tax Act 1961, where if we don't need to make payment to our sundry creditor, we record it as an other income in our PL, credit side. In GST, if we relinquish the liability, if we don't make the payment to the sundry creditor, we need to reverse the proportionate input tax credit. This is also very important. If you have written back any sundry creditor amount, kindly ensure you reverse this particular input tax credit. And this reversal shall be temporary in nature and not permanent in nature. I hope we all are aware of the new format of GSTR 3B, right? From August 2022, there is a permanent reversal and there is a temporary reversal. So if we need to reverse a particular amount in this respect of not making payment within 180 days, we reverse the input tax credit under temporary reversal, which is table 4B2. Why? Because if tomorrow, 1 year later, I make the payment of tax and value of supply to my supplier, I can claim my input tax credit in table 4A5 of the GSTR 3B of the period 1 year later. And I need to report the reclaiming of the input tax credit in table 4D1. We may be aware of this compliance point. Okay, so, okay, are we aware of RCM provisions in respect of, services received from government? This is also very important. This can be also overlooked. This is also real life notice from a Foundry client of ours, wherein the client has made payment of trade license. The trade license again can be classified as services taken from the government agency or government, right? That you are making payment for registration of a trade license. And they are saying that any services which you have taken from the central government, state government, union territory, etc., and or a local authority, you are supposed to pay RCM on that. 18%. So they are even charging RCM. Can you believe that? They are charging RCM on the amounts paid for trade license, right? So this also needs to be seen. Now there is a particular exemption in regard to this. If the particular amount which I have paid to the government or the consideration for the service received from the government, central government, state government is below 5,000 per transaction, there is no RCM provision in respect to that. There are other exceptions also. What do we do? If we take a fire license, at that point in time, we don't need to pay RCM even if we are taking services from the government. Okay, conversion.
Ishan, I have a question.
Yeah. Yes, Mr. Nikhil, please.
Ishan, suppose for a fire license, I pay about 50,000 rupees a year, and I am not directly getting the license myself. I have appointed a consultant, right? And the consultant is raising me a bill of a pure agent, out-of-pocket expenses, say 30,000, and other charges 5,000. His professional fees 5,000. And I'm not paying TDS on that because the fee component is below the prescribed limit described in TDS, right?
It's less than 50 grand.
I hope this provision will not attract, right?
So see, you have a very good question, Mr. Nicole. That is pure agent, which you spoke about. Let me just revise the figures. His charges, professional charges, are 5,000 rupees, and the particular amount which you pay to the government for your fire license renewal or registration is 50,000, is what I understand, right? It's 55,000.
There are three components in the bill. One is out-of-pocket expenses, speed-up money of 10,000, which is under the table expenses that these people usually charge, right?
That is
Right.
different. For that,
Speed
that is
up
no
money
recording. That is
10,000,
different.
5,000 is professional charges, and another 35,000 is pure agent charges. For those he has given me the supportings.
Okay, so see, now what happens is pure agent. Sir has a very good point Mr. Nikhil has made. Now, see, the consultant has raised an invoice to Mr. Nikhil of 5,000, 35,000, 10,000. That comes to 35, 40, 50,000 rupees. 5,000 is his professional charges. 35,000 is the charges which he has incurred on behalf of Mr. Nikhil's company and he has paid to the government and he has not charged Mr. Nikhil yet. And he is going to put it in his invoice, that particular 35,000 rupees like challan, certification, payment to the government, form filings, etc. But that particular amount has actually been paid to the government. The government has given an invoice in the name of Mr. Nikhil's company. So there, the particular invoice which has been raised by the consultant mandatorily under Rule 33 of CGST Rule 2017 needs to mention in bracket that reimbursements are being sought as a pure agent under Rule 33 against the 35,000 rupees in the same invoice. So the amount breakup should be in the invoice. 5,000 consultation charges, GST should be charged 18%. 35,000, the bracket, it should be incurred as a pure agent and reimbursed as a pure agent under Rule 33. And the third part will be out-of-pocket expenses, same, reimbursement. So this will not form a part of the consideration. He shall charge GST only on the amount of 5,000, which is his agency fees. But having said
he's
that,
not, he's claiming GST deductions, like he's not issuing me a GST bill because of the he's below the prescribed limit, and
so that's fine. But in this particular case, had he been registered, the moot point here again is the GST department will always try to catch the neck and the collar of the consultant, saying that, sir, you should have charged GST on entire 50,000 rupees because I don't consider you as a pure agent for Mr. Nikhil because you have not satisfied all these 8 conditions which I have mentioned here. That this entire amount of 35,000 which he has incurred, the consultant has incurred for Mr. Nikhil on behalf of, to the government, paid to the government on behalf of Mr. Nikhil, there should be no markup. It should be entire 35,000 spent to the government and recovered, no markup. First condition. Second, Mr. Nikhil should have a contract or a verbal or some sort of a communication or authorization that you act as a pure agent for me. Third part, that there should be a principal supply. There should be not just this, like, I'll just do for the government, there is free, whatever service. No, there should be all of these contractual arrangements and everything which is mentioned. Then only the consultant will be able to prove to the government that, sir, if I am registered, I have correctly charged GST on only 5,000 my agency fees and I'm not supposed to charge on 50,000. Consequently, Mr. Nikhil, in case if the consultant was registered under GST, Mr. Nikhil was supposed to only claim input tax credit on 5,000 rupees, 18%, that is 900 rupees, rather than 9,000 rupees on entire 5,000. So, pure agent concept is very important.
I have two recurring questions, Ishan.
Yeah.
Number one, the onus would be on the consultant, not on me, right?
Absolutely not on you. But if you have claimed input tax credit of 9,000 on entire 50,000, and he is just paying tax on 5,000 rupees, then there will be an onus on you, but there won't be any onus on you directly in terms of output tax payment. It will be on the consultant.
All right, because he has not issued me a GST bill, therefore I cannot claim the GST credit.
He does not need to issue a GST bill because his total aggregate annual turnover for 25-26
is below 20 lakhs.
Is below 20 lakh rupees. So he is not supposed to get registered.
And also, like the 5,000 wala provision will not hit here, right? Because he's acting on my behalf as a pure agent, and the limit to that, had I been directly taken the registration, it would have costed me more than 5,000, correct? I would have had a liability to pay under reverse charge on amount since it's exceeding 5,000. But somebody else is representing me and acting on my behalf as a pure agent. Therefore, I'm not the provision doesn't attract me directly, correct?
See, from pure agent perspective, in that particular invoice, if you are making payment, there should not be any GST on that, first of all, because he's not registered. Had he been registered also, if he's able to prove he's doing it all as a pure agent, then there will be no implication of him charging GST on you. That is a separate question. Again, coming to this notified service provision, which is taking service from the government, which is that if it is not your fire license is explicitly excluded from RCM provision. So your question is pertaining to only
license. Say it's a PCB license.
Say factory license. So in case of factory license, sir, if you have made payment of, for example, 7,500, which is more than 5,000, so there you will have to pay RCM of 18% on this 7,500 and claim input tax.
Even if he's acting as a pure agent.
Yes, you shall have to. Yes, you shall have to. Because as a pure agent, again, that's a precaution in a different aspect, that is fine. But this is a notified service. The department can anytime sift through your documents and say, sir, where is you've taken services from the government, where is the RCN? So how will you defend yourself? This is a service which you have taken. The bill is in your name. Bill is not in the name of the consultant from the government,
Okay. Thank you, Ishan.
right? Yeah. Okay. So conversion charges. Are we aware that what should be the conversion charges, like the job working rate? Like if we are Foundry people and we need to convert, there should be job working, right? So for general job work, if our job worker is charging 18% to us, and if he's giving a particular invoice when he's charging 18%, and you are claiming input tax credit of 18%, it becomes a problem. Why? Because the department will say, no, you are supposed to only claim input tax credit up to 12% because the correct rate should be 12% on job work. It should not be 18%. So the first onus is on the particular job worker, but the GST departmental audit is for you right now. Since you have claimed an additional ineligible input tax credit of 6% more, they will ask you to reverse amount up to 6%, which is, just imagine, this is how much amount? 59 lakh 85,000, 59 lakh 85,000 just on this one point. That he has been claiming input tax credit of more than 6%. And what was his fault? Just ignorance. Because he has been receiving your purchase invoices, means your job working invoices at the rate of 18%. But you are supposed to be informed. Secondly, here, let us see this. You did not find. Now, for example, if you are sending your goods for job working, you are supposed to get back the goods within how many time? How much time? Within 1 year. This is a form which is called ITC-04. Are we aware that if we are engaging a job worker, we as a principal manufacturer, we are supposed to issue delivery challans. We are not supposed to issue e-way bills in West Bengal. We are exempt only in West Bengal to issue e-way bill when we are sending goods intrastate in West Bengal of any amount to a job worker. And there is no tax invoice because there is no consideration here, right? It is under delivery challan. That is Rule 55. That is movement of goods without any consideration, movement of goods without any supply. So here you are going to send your goods across to your job worker in Bada Bazaar, in Matia Bruz or any other place under the effect of a delivery challan, no e-way bill, right? And there is no tax invoice also. But the goods need to come back. The finished goods need to come back after job working within 1 year from the day you sent it out. So your responsibility is to file this ITC-04, and you are supposed to report your challan numbers, delivery challan numbers, outward delivery challan numbers, right? And the challan date. This you are supposed to file as a as a principal manufacturer for all the goods sent to job worker, and you are supposed to mention the quantity you are sending. For example, 6 units of, for example, base shell 3 units on these dates. Now then again you need to file another table in ITC-04 that your original challan number is this, and you have received a delivery challan, inward delivery challan from the job worker on the receipt back of goods from the job worker after job working happening on the goods. So the department, how does it keep a track that you have received the goods after it being worked upon from the job worker within 1 year? Is through this ITC-04 form, through your job worker register, hard copy or soft copy register, that goods have been sent, goods have been received, and they are tracked through job worker, through the delivery challans, in inward delivery challans from the job worker, outward delivery challan by the principal manufacturer, which is you. And all of these need to be reconciled. Why am I laying so much of importance and emphasis on this? Because if someday the department comes with an INS-01 form, which is inspection form, and they tell you, oh sir, you do job working, kindly give me your job worker register, kindly give me your ITC-04 forms, copies. You'll be like, sir, what are these? I don't know. They are going to consider all of these particular taxable, all of these amounts which you have sent to all of these job workers. So there was some disturbance, I believe. I just got disconnected. Can you hear me and can you see the screen? Please confirm.
Yes, yes, we can see now.
So here, what I was saying about ITC 04, if you do not have an ITC 04 form, you are unable to substantiate the receipt of goods. So as a foundry owner, you may not be able to substantiate that all these goods you have sent and it has been received back within 1 year. And you may be considered, all of these considered as deemed sale. And you may have to pay 67,45,000 each of CGST and SGST because these may all be considered as deemed sale because you could not substantiate with your documents. And ITC 04, you need to file as a foundry owner. If you are more than 5 crores of annual aggregate turnover, you need to file it 2 times a year, right? Yeah, more than 5 crores. That is 25th of October for first half, 25th of April for the second half. Extremely important form which we've gone through. Now, are we aware that whenever we are making any exempt supply, exempt sale, we are supposed to reverse our input tax credit also? Like, for example, let us consider this is a real life notice. Exempted supply 64 lakhs, non-GST supply 5 crore 83 lakh. Now they have taken a total. You have exported how much? 20. How much is it? 23 crore 63 lakh 84,000. Zero rated without payment of tax is 102 crores, 34 lakhs. Total sale which you have made, including exempted and your non-GST supply is 145 crore, 97 lakh. Out of which they are saying close to 6.5 crore is either exempted or non-GST supply. So once the department catches this exempted sale or non-GST supply sale, then next point comes to, sir, what about reversal of input tax credit? Kindly reverse it. They are asking you to reverse how much? They are asking you to reverse 58 lakh 34,000 each of CGST and SGST because they are saying that these are exempted supplies. Now, sir, how are you going to save this entire amount of my foundry clients? How? By just this submission, which I'm going to show you. I just showed them the breakup of this 5 crore 83 lakh 96,000. What is it? Exchange difference, foreign exchange difference. It is a non-GST supply, no GST applicability. It's not an exempt supply. We had just discussed interest on FD. Sir, are we aware that interest on FD is an exempt supply? And it is exempt under entry 27A of Master Exemption Notification of Services 12/2017 of Central Tax Rate dated 28th of June 2017, right? And even though it is an exempt supply, this is one exceptional case where we don't even need to reverse our input tax credit. See this, Rule 4243. What does it say? That there are only 2 types of exempt supplies in entire GST Act where they are considered as exempt supplies, but no reversal of input tax credit is required under Rule 4243. One is your pure interest on FDs, deposits, etc. And second is sale of duty credit scrips, MEIS, SEIS, road tab, right? All of these are duty credit scrips. If we are selling these, right? So these are what? Exempt supplies, but they have one more benefit, advantage attached to it, that they are exempt supplies, but they shall not be considered as exempt supplies for the purpose of reversal of input tax credit under Rule 4243, read with Section 17, subsection 2 of CGST Act. So what is happening is, I have given them the breakup. Interest, duty drawbacks, rebates. The entire amount is devoid of any GST element. So here, I'm saying that I don't need to reverse these proportionate input tax credit of 9 lakh, 28 lakh, 28 lakh because I've given them this submission, right? Now, can anyone tell me if your company is engaged in sale of mutual funds, the securities, are they considered as sale of goods or services? Or they are exempt supplies, right? So they may be exempt supplies under Section 17, subsection 2, but they are neither considered as goods or services, but they're still considered as exempt supplies. So what will happen here? They are going to, for example, you have engaged in mutual fund sale of 62 crore 10 lakh 39,000. So as per Rule 42, they are going to consider 1% of the entire transaction amount as your exempt sale. That is 62 lakh 10,000. And you shall have to reverse input tax credit proportionate to this. Means your total sale is 55 crore 92 lakh. So 62 lakh 10,000 exempt sale divided by total sale into the total input. That comes to 609 rupees just of input reversal. But you need to reverse that. Here I have mentioned in tables, very easy examples. You can go through it later, how to compute common credit and how to reverse input tax credit from this common credit, right? As per section 40, rule 42 and 43, when you are even supplying goods which or services which are subject to GST and which are exempt also. There is a mixed bag. So I mentioned here, you can go through it. Now, someone was mentioning about incorrect payment of RCM. So this is a very good example. This is a real life case. As you can see, I had to make correct tax payment under RCM of 60,000 under IGST. But by mistake, I paid 30,000 rupees of tax under RCM under CGST and SGST. It should have been 60,000, but I paid 30,000 by mistake under CGST and SGST. 1 year has passed. Now, if before 30th of November, I can easily get it amended, right? In my GSTR 1 and GSTR 3B. That is fine. But GST audit happens after 2-3 years. So after 2-3 years, once this is detected, the department will say, sir, there is short payment of CGST and SGST under RCM. Kindly make payment. Kindly pay interest. Kindly pay penalty. And this amount which you have already paid, forget it. This is a double, triple, 4 times whammy, right? But there is safeguard. What is the safeguard? The safeguard is under notification 35/2021 and section 77 of CGST Act, section 19 of IGST Act. What does it say? It says that, sir, this 30,000 rupees which you have short paid under RCM for CGST and SGST, which you have paid in excess under CGST and SGST, but you have short paid RCM under IGST of 60,000. No problem, sir. Today I've done the audit in 2025. This case is of 2022-23. 30th November 2023 is elapsed. I cannot make amendment. No problem, sir. What you do is kindly make the correct payment of IGST of this 60,000 rupees today. Kindly make the correct payment today. And what do you do? Sir, you can claim a refund of this 30,000 which you have paid incorrectly 3 years ago. When? You can claim from 2 years from the date of the correct payment of tax, which is today. If I made correct payment of tax under RCM or under normal provisions also of 60,000 today, I can claim refund in RFD 01 within 2 years of the correct payment of tax. So I can get back my money also. Second thing is, sir, no interest applicability, because there is a clear-cut exemption of applicability of interest in case of IGST paid instead of CGST, SGST and vice versa. So no interest element and no penalty. So, sir, there is no issue at all. You can, even today, if a foundry owner, you have incorrectly paid tax under CGST, SGST, and you should have paid under IGST or vice versa, you can claim the incorrect tax refund today also. Within 2 years from today, if you make the correct tax payment, no interest, no penalty. This is very important. Very few people, they avail of this particular benefit. Sir, have we come across any case where any input tax credit ledger, electronic credit ledger has been blocked by the department? Why? Because as Nikhil ji or someone had pointed out earlier, Nikhil ji only I think had pointed out earlier, that in case if a supplier has been adjudged as fake or his registration has been cancelled or he's very callous, he did not have money, he shut his business, he did not file his GST 3B for 6 months, his registration is retrospectively cancelled. What happens then? The department wants to secure its revenue. The supplier is absconding, so he will catch you. You have already made the payment of your tax to the supplier, but the supplier has not paid it to the government. So for double whammy, means double whatever, problem, issue, the department will come to you and will ask you to, what will the department do? Department will say, sir, he is a fake supplier, he is absconding. Kindly, you have availed input tax credit which is ineligible. So I have the right, because you have claimed, I have proof also that in your electronic credit ledger today, you have, for example, an amount of 37,72,000 which is availed from supplier who is not functioning, where you have claimed input tax credit without receipt of goods, which Mr. Nikhil had pointed out. In all of these cases of fake invoicing or the supplier not existing or retrospective cancellation, the department has power to get into our electronic credit ledger and block the amount which it feels that tantamounts to the amount which is pertaining to the amount in respect of all the purchases made from these fake suppliers, and it can block it. Now, what is happening is the department is taking a very harsh step that if they want to block 75 lakhs, I don't have 75 lakhs. I have only 14 lakhs. on 25th of Jan. So they blocked on 25th of Feb. I had only 14,63,000. They have blocked to the extent of 75 lakh. That is minus 35 lakh and minus 25 lakh. Is this even justified? What does this mean? This means that my electronic credit ledger is now negative. That if I file my GST or 3B returns further, they are going to set off against this negative amount. Means I am not going to get any benefit of any purchases which I am making up to the amount which I set off and make it positive. It's a big, big blow to my company. Working capital blocked of 75 lakhs. So, sir, there are Supreme Court judgments now, High Court judgments that you can put up to your officer and you can quote them and you can mention that, sir, this is not justified. You cannot, you can only block up to 14,63,000, which is the ITC available in my electronic credit ledger. You cannot extend to negative balance in my electronic credit ledger. I've even mentioned, I provided the notice also, real life, whatever client, I have also provided the case laws which you can avail. These are few cases where you can see, which we received, the burning issues, which Mr. Nikhil was also mentioning. See, invoices from cancelled supplier, this entire amount they're asking us to reverse because they are retrospectively, the supplier is cancelled. Now the supplier, the supplier is not filed as GSTR 3B. They are asking us to reverse. The supplier is registered in Surat and he has given us a CGST, SGST bill, but we have claimed input tax credit. That is wrong. Now, sir, let us come to another point here where the supplier has not filed his GSTR 3B. So we can track it, right? In our GSTR 2A, 2B. This is a GSTR 2A. There is a tab. We can see, we can put a filter and see whether a supplier has filed his GSTR 3B or not. If it is not filed, then there is a new provision which has come. What is the provision? That is Rule 37A and Section 41, Subsection 2. When is it come from? It is come from your October 2020. It has come from 26 December 2022. What does it say? It says that, sir, if your supplier has not filed its GSTR 3B for which month? For example, for the month of for the month of April 2025, for instance. Let's take April 2025. You don't need to reverse your input tax credit in the month of April or May or June or July or even up to 30th of September of the next year. You don't need to. You don't need to reverse the input tax credit of this particular input tax credit against which the supplier has not filed his GSTR 3B up to 30th of September of the next year. Means for 1.5 years, I can claim this input tax credit, which I claimed in April, but the government has not received the money. But still I can enjoy it because up to 30th of September of 2026, I can avail this input. And then I will still check in my GSTR 2B in table 5 that the supplier has filed his GSTR 3B or not. In case if he has still not filed, then I'm going to reverse that input tax credit. When will I reverse? Up to 30th of November. By 30th of November, I have to reverse the input tax credit against which the supplier has not filed his GSTR 3B. So still, as today, as a foundry owner, I know for 1.5 years or up to 30th of November next year, 30th of September, I don't need to reverse. And if the supplier is still not filed his GSTR 3B of 25-26, I need to reverse by 30th of November. But I can check up to 30th of September. I don't need to immediately reverse. But if I reverse, I will again reverse it temporary reversal under table 4B2 of GSTR 3B. So that if tomorrow, if the supplier files his GSTR 3B, I can reclaim it without any time limit. There is no embargo or prohibition to reclaim the input. Even after 30th of November has passed, under section 16 subsection 4, these are few cases in GST law where 30th of November has also passed. We can reclaim it after the time limit of 30th of November has passed. No issue. There is Rule 37, Subrule 3, Subrule 4 mentions that section 16 subsection 4 time limit is not applicable on this. Now let us see this particular case as a foundry
Ishan,
owner.
I have a question.
Yeah, Mr. Nikhil.
Like I have multiple questions. Like firstly, if I can just enjoy the credit, right? I cannot claim refund on it.
No, you do not. You will not be able to get refund because once you file, means if you have exported without payment of IGST, so at that point, a particular point in time, you will file your RFD 01 and your Annexure B, right, with all
Yeah.
your inputs.
Correct.
Now they are going to check at their back end that whether supplier has filed his GSTR 3B or not. So in that case, that particular amount will be rejected,
Reflected.
for which you will get
Correct.
back the particular amount recredited in your electronic credit ledger. But you are absolutely right. For this technical question, you may not get a refund. You may not get
All
a
right.
refund for that
In
amount.
my example, like it's a practical example with one of my clients, where the
Hmm.
client had the client was paying the vendor was pay the vendor was filing his GSTR returns up
Hmm.
to say up to May, and for June he didn't file, and there was some scrutiny going on his part, and he got delisted retrospectively.
Hmm.
Right, and I was claiming GST credit, GST
Hmm.
refund for my amount. So the
Hmm.
department had raised a notice that for say for example 10 lakh amount, I'm
Hmm.
not eligible to claim that refund, and
Hmm.
I had to prove to them on my owners that I'm eligible for this credit.
Hmm.
But now, having said that, the as per the rule that you have shared, I cannot claim the credit. I cannot claim a refund on the same, but I can definitely enjoy the credit, right?
You can enjoy up to 30th of November,
Yeah,
September of the
correct,
next
correct.
year, and
And
then you need to reverse.
after 30th of November also, I if I need to
You can
reverse it
reclaim back.
temporarily, I don't need
You
to
can reclaim
pay
back.
the interest amount, right?
You have to pay the interest amount if you know. This is a very good point which you have raised. If you reverse the input tax credit up to 30th of November on checking up to 30th of September, if you reverse it on 30th by 30th of November 2026, you don't have to pay a single penny of interest. This is a
Up to
very big
30th of
advantage.
November.
You don't need to. But if you do not reverse it up to 30th of November for 25-26, then from 1st of December onwards, you will have to pay interest from the date of availment of interest, of
All
input.
right. All right. All right. All right.
Yes.
Thank you.
Uh, Thank you. Yeah. These provisions I've already put. You can go through it. Section. Now, see, this is a very silly error which the supplier has done. As Nikhilji was saying, the errors of suppliers, we have to be impacted, right? So, what has happened? Let us see this particular invoice. It's also from our another Foundry client. Place of supply is mentioned as West Bengal. See, try to understand. This supplier is in Karnataka. He's sending the goods, pig iron, to Havla, West Bengal. So place of supply will be the destination of goods where the goods are stocked. That is in Havla, West Bengal. So the place of supply is West Bengal. There is no error in this invoice. Place of supply West Bengal, consignee code, state code, destination West Bengal, state code is 19, etc. But when this particular supplier files his GSTR1, by mistake, he uploads or he files place of supply as Karnataka in his GSTR1. And he puts the state code of Karnataka rather than 19 of West Bengal. But he has collected IGST from me. He has paid to the government IGST. He has collected from me IGST. His bill shows IGST amount. I have paid, he claimed input tax credit of IGST. But now when my GST audit is happening, burning issue as we see, that when the GST departmental officer will be like, sir, this particular entry which is appearing in your GSTR 2A 2B, that is showing that it is ineligible. Place of supply outside West Bengal. You are not eligible to claim this input because the place of supply of the particular transaction, they are showing that the destination is in Karnataka. It's not in West Bengal. Place of supply is Karnataka. So what happens is that the revenue, 50% of IGST revenue goes to Karnataka, does not come to our West Bengal commercial taxes, means our state tax. So how, if the West Bengal state does not receive 50% of IGST, why will the West Bengal state allow you to get your IGST input tax credit set off against any output tax liability of state? So they block that particular tax. But we have also contested, we have not received relief, usually in the lower authorities, but in higher authorities, in few cases, we have received relief. And I'm sure that moving ahead, if we contest before the GSTAT, we should get relief in this regard because, the collection of tax is correct. This is just the settlement of this, basically settlement of funds between the governments because of that and some error, which is inadvertent and bona fide error, and which is outside my doctrine of possibility, right? If something has happened, there are many case laws that I can quote, I may expect a relief that way. Rule 86, we are we aware of this particular provision. If we don't comply with this particular rule, our registration can even be cancelled or suspended. Are we aware of this? What does it say? It says that in case if your sale for a month is more than 50 lakh rupees. I'm not talking about exempt sale, not talking about zero rated export. I'm talking about just pure domestic sale. If it is more than 50 lakh rupees in a month, what do we need to do? We need to ensure that 1% of the output tax liability of that particular sale is paid in through the electronic cash ledger. By my cash, I deposit. Now, let's take an example. 50 lakh rupees is the sale. 18% of 50 lakh rupees is how much? Say, for example, 9 lakh rupees, right? Maybe 9 lakh rupees, right? Right, 9 lakhs. So 9 lakhs, 1% of 9 lakh of output tax liability is how much? That is 9,000 rupees. So 9,000 rupees amount I need to make payment in my GSTR 3B out of cash ledger compulsorily, even though I may be having input tax credit of, for example, 1 crore. Does not matter. I need to compulsorily pay 9,000 rupees fixed under electronic cash ledger, and the remaining output tax liability, which is there, means 8 lakh 91,000 rupees. I can use my settlement of means the utilization of credit as per Rule 49A, Rule 88A, which we are going to see. So let us, this example also I have put. Now there are few exceptions here. What is the exception? You may not need to follow this. Rule 86B, that is compulsory payment by 1% withholding by cash. In case if one of your managing partners or one of your whole-time partners in the previous 2 financial years for which the ITR deadline has already passed. So for 2025-26, the last 2 years for which ITR deadline has passed is 22, 23, 23, 24, because 24-25 ITR deadline is not passed yet. If your managing partner or managing director for both the years pays income tax of more than 1 lakh rupees. Now, income tax is gross income tax here, means it is before the deduction of your TDS or advance tax and all of that. So then you don't need to, your company does not need to follow this Rule 86B for the entire year. Similarly, if you have availed refund of more than 1 lakh rupees in 24-25 or 25-26 this year, you don't need to under your inverted duty structure or as export. So you don't need to follow 86B. Also, one more thing, for example, it is December 2025. So from April 2025 to November 2025, if total sale is 5 crores, and for instance, you have to, you have on this 5 crores, your total output tax liability is coming to, for example, 90 lakh rupees, right? So out of this 90 lakh rupees, 1% comes to how much? 90,000. So if you have already paid in cash, for example, 1,10,000 rupees, against all your output tax liability from April 2025 to the preceding month, which is November 2025. So for the month of December 2025, you don't need to follow this payment of output tax liability compulsorily in your cash with using your cash share. So this again needs to be applied. In case if we do not follow this, and if it is spotted, there are huge ramifications for this. A few clients of ours, we had to file, for revocation because this got cancelled. The registration got suspended. We had to file revocation, all of that. This is we all know, right? Rule 49A and Rule 88A and Section 49A, right? If there is input IGST liability, what do? If there's IGST credit, we set off the IGST credit entirely against the IGST liability. If still there is IGST liability left and IGST credit is entirely exhausted, we then use CGST credit, right? To set off the IGST liability, then SGST credit, right? So, and we need to exhaust the IGST credit entirely before we start using the CGST or SGST credit. So these are also notices. This was not followed. They had to pay tax. This was the correct amount, which should have been the balance, but the balance was extra because there was incorrect utilization of credit and one had to pay. Now,
Nikhil
there
ji,
is...
may I intervene? You need to wrap up now, maybe in another
Sure.
5-7 minutes. Okay.
Sure, ma'am. So, more or less, these are the points which I understand. See, we have covered approx 170, 180 slides, right? Now, few important things. I will just see 2-3 things in one minute. I will just cover. You can go through it by yourself. One thing is this liquidity damages. See, as a foundry exporter, if you are exporting to China, now in China, you know that there are a lot of issues. If Corona comes again, God forbid, or if there's some issue with India as a standoff, they cancel the purchase order from you and they give you an advance and you forfeit that advance. Now, clients ask us that, sir, as a foundry owner, we forfeited the advance and maybe 10 crore rupees. And Do we need to pay GST on that? So that again is liquidated damages. You may not require to pay GST on that as per circular number 178 because you did not make the contract to earn money out of forfeiting. This is just mere flow of money. This is just a part of your contract, right? So this is not a consideration. You can go through this particular, you can save a lot of money with this. In fact, if this is raised during audit, you can quote this particular this thing, the circular. Okay, samples. If we send samples outside India, are we aware that many people they show it as export? But sir, before showing it as zero rated supply or export, is it even a supply? A supply under section your 7, right? What does it say? It says that there should be a consideration. If there is no consideration, there is no supply. So if there is no supply, there cannot be a zero rated supply. If there is a no zero rated supply, how can it be considered as an export? So all the samples which you are sending out, they should not be considered as export. In fact, rather you should reverse the input tax credit under section 17 subsection 5 clause H because you're giving away these samples for free. So you need to keep this also into consideration. Okay, so you can go through these other slides which I have put. You can go through this also. There are few summary of notices which I have extracted, I've put here. These are the headings under which usually foundry exporters, foundry domestic players, they are charged in GST audit. Inadmissible credit note. We have discussed all of this. Exempted, nil rated. So this amounts, to a big amount. You can check that yourself.
Ishan, will we be getting a handout of this?
Yes, you shall be getting through the NCEP. Anima
Yes,
madam,
we shall send it to you.
pass.
No worries. All
Yeah.
participants will get.
All right. We'll be getting it on the registered email ID, right?
Yes,
Ma'am,
yes.
ma'am will coordinate for that, but definitely you shall be receiving this. So there's also, usually we receive, this is one last point which I would like to say. We receive notices where there's a discrepancy of outward supplies between e-way bill and your GSTR 3B. Now, they say that, sir, as per your e-way bill data, your sale is 35,83,000. As of your IGST amount is this much. As per your 3B, you only paid 35,32,000. So 51,000 is short. You make a reconciliation because there are many cases where e-way bills are not generated, but invoices are there, right? We are all aware, interstate 1 lakh, intrastate 50,000 total invoice value, services for which, there can be a supply. So all of these reconciliations need to be provided and you don't need to make payment of these. So you can go through these, So I rest my case here. There are many more points, but not as significant. You can go through it yourself. In case if there is any question, please, you may ask.
Okay. Thank you. Thank you so much, Mr. Ishan. Is there any question on today's presentation you may ask, but we will entertain only very few questions because time is really running out. We have exceeded our time. Ishan is a very knowledgeable person and everything was just pouring out. And I'm so happy you have done it, particularly for foundries. So
Yes,
any
ma'am.
question, anyone? Please, you may unmute and ask. Okay, later on also, if there is any question in your mind, you can send it to NCEP. We will try to resolve it and give you an answer with the help of Ishan himself.
Sure, ma'am.
So, as we are now ending the session, it falls upon me to propose a really formal vote of thanks to you. I'm really
Thank
thankful
you.
to you. Ishan has always been very supportive to us. So, for your brilliant and insightful and very detailed discussions. Thank you so much, and all participants. Thank you for your patience, and we shall share the presentation copy to all of you. We will share one feedback form. Kindly fill that up and you will get your presentation copy. So thank you all because we have to prepare for another meeting. That's why I'm wrapping it up now. Thank you. Thank you, everyone. Thank you, Ishan, once
Thank you
again.
so much, ma'am. Thank you, everyone, for joining in and let us stay connected. Thank you so much for having me. Thank you for the patience. Have a good day.
Thank,
Thank you.
thank you. Have a good day. Bye.